All right. Hello, everybody. Welcome back to the channel. We are here Sunday. Futures, baby. It's time to get into it. Thank you, everybody, for being here. Hope everyone had a great weekend. We're back. We're live. Very excited. Wow, goodness. Yeah, why not? Why not? Why not call Steve within 30 seconds of starting the show? Why? Within 15 seconds? Why not? Why isn't Steve just like always there constantly? Why doesn't Steve just take over the channel? I mean, quite frankly, that would make more sense. Steve will be joining us in a bit. He wrote up a pretty spicy post on Twitter an hour ago about the AI bubble, and so he'll be on around probably 8:20ish, so in about 30 minutes from now, and we'll get his thoughts on what's going on in the markets. But we got a big week coming up, a lot of stuff to talk about, so we'll get into all the different macro headlines we've got going on. Non-farm payrolls is going to be the most important thing, I think, on Friday. So we don't have too much data until Friday. And so we'll see what we get when Friday does happen. And hopefully those job numbers are not that bad. Again, the reason we cut rates 2 weeks ago was because of the labor market. So the labor market is going to be really important. And we'll see what happens there. We have a couple of events this week. I didn't even know we had Amazon and Google events, but we do. Amazon's announcing some new products with Kindle and Alexa, and Google's announcing some new AI stuff. So we're going to see what they show off. I think that's going to be on Tuesday for Amazon, Wednesday for Google. So those could be potentially not market moving events, but definitely stocks specific moving events. And we'll see what happens there. And then in general, you got crypto that's been losing for the past couple of weeks. Bitcoin and Ethereum actually are doing a little bit of a Sunday fun day run, 112.26 on Bitcoin. It was at 109 on Friday, and Ethereum broke all the way down to 3,800. Right now it's back to 4,140. So maybe Robinhood, Coinbase, MicroStrategy, BMNR, etc. got a little bit of pump when the overnight markets open in 12 minutes. But that's kind of what we've got going on for this week. So we're going to see a bunch of different things that are playing out. Tesla delivery numbers this week also are going to be very, very important. So we'll see what kind of happens there. We get the energy numbers and the delivery numbers. And, hopefully those are good. I think everyone's expecting them to be good because Tesla actually was one of the only stocks that was green on a Friday, ended at 440 on the dot, 3.92%, has been holding above 400 for the past 3 weeks. And hopefully this is the fourth week. And then finally, we have 2 days left in quarter three. So on Wednesday, we began a brand new quarter with Q4. And that means all these companies lock in their earnings. We get it ready to basically get digested. And then by mid-October, we start Q3 earnings. Now, we got to count our blessings while we have them because we don't know next year if we're going to have quarterly earnings anymore. This might be a luxury for us. Hopefully it takes a couple of years for that to change. But for now, we have quarterly earnings, and we'll see what happens in 2026. But that's what we got going on this week. Good morning. Not good morning. Good afternoon. Thank you, everybody, for look. I want to get into the market open already. Thank you, everybody, for being here. What's up? What's up? What's up? Juan, what's up? I'm Benny, YC. We got Melanie in the house. Peter, we are all Steve. I think Steve is getting ready to legit start his YouTube channel. He might have already started it over the weekend. I'll ask him when he joins. But the amount of people that want a YouTube channel from him, I think it'll be good if he starts one. Chris, what's up? Blake, what's up? Greg, how was Heat? That's a great question. It's a great question. I was waiting for someone to ask. And my response to that question is Heat was a movie. And I watched the movie. And the reason that is the extent of my analysis is because my mom told me when I was a young little boy, if you don't have anything nice to say, then don't say it. And so my analysis on Heat is that it was indeed a movie. 2 hours and 51 minutes of a movie, and I watched that movie. And that was my analysis on Heat. So now Steve got a phone call from me this morning and got my extended analysis on Heat, and he told me if I say that publicly, I'm not going to be able to get away with it. So as a result, that's my analysis. I did watch it. I legit did watch it. Steve knows I watched it. He called me in the middle to make sure I did. But, he didn't love my analysis of it. So I'm just letting you guys know that that's my analysis. It was a movie and I watched it. And that's it. That's all we got from there. So that's my analysis on it. Like, in all seriousness, I didn't love the movie. But it is what it is. That's just my opinion. I know a lot of other people like it. But it's whatever. What I did enjoy is college football. So I lost some money on Penn State. Like I told Farzad I would lose money. I mean, he told me to bet on it. I bet on it. I lost like $150. I knew I would lose, but now we have the dopamine of getting to blame Farzad for losing money, which is always fun when you can blame someone else for losing money. But honestly, bro, I mean, I'm not the biggest football fan in the world, but like, it was kind of exciting. It was actually really exciting to watch the game. And because I had money on the line, it was even more exciting. But at this point of the game, I had realized, and then they actually came back. It actually ended up being a tied game. They went to double overtime, and then Penn State lost. It is what it is. But if you had like, I don't know, 25 to 50 grand, and your sole intention for football season and college football, NFL, and then I guess college basketball season. So from like, what is it, September to basically April. If your sole intention was to take that amount of money and just bet on these basketball games, football games, because you actually knew and understood, obviously there's luck involved in it, but like, just like stocks, right? Like if I'm betting on Snapchat on earnings, maybe it goes up, maybe it goes down, but like I'm making a bet. At the end of the day, I am making a gamble. The good thing is hopefully if Snapchat doesn't have the worst earnings in the world, even if the stock falls 20%, it'll one day come back. In this, if you're wrong, you lose all your money. But if you're somewhat good at sports, like 60-40, you can still make a decent amount of money. Like you can legitimately become someone who lives off of sports betting. Now, I don't recommend that because it's obviously not as easy to do as just like buy a good company and hold it. But it is kind of addicting, bro. I can understand why Robinhood is printing money off these contracts. I'm probably not going to gamble on sports again. It was only $200, but I mean, dude, it was exciting because it's like you can trade them in just like you can trade a stock like in the moment. You can trade these sport contracts in the moment. And I could have, when they got to double overtime, I could have made about 10% of my money. And I was like, let it go all the way. Who knows? Maybe they win. They ended up losing and I lost 100% of my money. But like still, it's like the thrill of it I thought was very exciting. So it's an addictive product, but it is definitely something that can get a lot of people excited. You got to learn when to buy and when to sell. Yeah. I mean, I should have closed it out after they tied it, given I was down 40%. It came back, and then I ended up losing everything. But it was pretty exciting. Charles, what's up? Michelle, what's up? Greg, Taylor, Rusty, Grant, thank you, everybody, for being here. We got about 5 minutes until the overnight market's open. We'll see what we got going on there, and then we got a bunch of headlines that we'll talk about. And then in about 20 minutes, we will get Steve. Nina says, do you mean you wasted time? Look, I'm not saying heat was a waste of time, but, you know, Nina, if you want to put those words in my mouth, let's just say I wouldn't take those words out of my mouth, that it was a waste of time. I'm not saying those words, but if someone were to say those words for me, you know, it is what it is. It is what it is, but it was a movie and I did watch it. All right, so we got about 5 minutes. Let's see what we've got going on. Again, Bitcoin and Ethereum are the main ones that are running. We had a bunch of different little macro headlines that we'll talk about. Well, let's do a little bit of a preview of what we have going on this week. So on Monday, don't have anything too crazy outside of some Fed speak. You also do have some companies going public like Fermi. Now, we looked at Fermi. There's a couple other companies called Norex, Neptune Insurance, et cetera. Fermi is the one that has got the most amount of attention because it's a Texas energy play. They are naming one of their nuclear reactors the Donald J. Trump reactor. I'm not making that up. That's legitimately one of the names of the reactors. $13 billion company. I will not be participating in that IPO, but I do think it can do well. And so for anyone who's trying to flip it, if you don't care about like the rules about flipping IPOs, that one might do well. That's one thing we have on Monday. Then on Tuesday, again, Amazon hosting a hardware event, which will be important. You have a bunch of the Fed chairs speaking in the morning, so we'll see if that moves any of the market. And then you have Austin Goolsbee, who's going to be talking as well at 1:30. He's one of the Fed presidents. And then on Wednesday, you have the Google event. So that's going to be really important. I didn't know Google was hosting an event, but it's a Gemini event that's expected to unveil the integration of Gemini AI for smart home devices. So that could be something that's actually very exciting and be strong for Gemini. And then Thursday, you have a little bit more Fed speak. Friday is the big day. We have the non-farm payrolls. Very, very important. Economists expect about 50,000 jobs that we've added in the month of September, and the unemployment rate to be about 4.3%. If that comes in lower than 50,000, you know, imagine like 10,000, 20,000, that will further ignite a reason for the Fed to cut. Markets might not necessarily love it, so we're going to have to see how the market reacts to it. If we add like 100, 200, 300,000 jobs, which I think is very unlikely given all the data we've seen of the labor market, but if we did, then I think it would be less likely for us to get a rate cut. Right now, the probabilities for a rate cut are almost guaranteed for October. Well, not almost, I mean, 89%. It's not, you know, like 99%, but, oh, that's December. Hold on, October. Yeah, October's still 89%. Okay, so October and December is 65, October is 89. If we get a really hot labor market, aka a lot more jobs, maybe that number goes down to like 80%. If we get a low labor market report, less than 50,000, that number probably gets up closer to 95%. So that's going to be important. And then, yes, of course, Tesla Tuesday, we get deliveries. What are the expectations on that? I think it's around, well, UBS is 503,000. No, 447 is the street number. 447 is the analyst consensus number. Okay, so some banks are talking about 503. At least that's the ones I saw from UBS and Morgan Stanley. 447. All right. I think Tesla easily beats 447. Put in the chat. What do you think? We got 3 minutes left until the overnight market's open. What do you think? I'll do a poll as well. I think they definitely beat 450. Question is, can they beat 500? That's going to be important to see. Tesla deliveries, 447 consensus, below 440, 450, and then we'll do 450 to 475, and then 500 plus. 500 plus. I mean, if they come out with a 500 number, dude, that would be fun. That would be very, very, very fun to see. But we got to see what they ended up doing. So yeah, that'll be on Tuesday. So it's still a jam-packed week. Last week before we, it's about a week and a half until we officially start earnings. But I think it should be fun. And, the other thing that's important about this week, and we'll look at some data on what October looks like, because we've analyzed September in so many ways. It was supposed to be the worst month of the year. And historically it is. We got 2 days left. We'll see how these 2 days end out. But if they end out kind of the same, I'll show you guys some analysis on kind of what the average percentage gain ends up being for September. And then we got to deal with October. And if October is decent too, November, December tend to be strong. So maybe October is that one last pullback before we kind of have that end of year rally, driven likely by a rate cutting cycle. But if October is just like September and August, then maybe we end out the year pretty strong for the next 5 months, for the next 3 months. And that also would be an incredible end of the year as well. Oh, Nike has earnings on Tuesday? Really? Okay. Got about a minute left until overnight markets open. Yeah, Nike is on Tuesday. Oh, Carnival's tomorrow. Carnival Cruise. So that'll be a big one for those in the cruise lines. We know Chris is in the cruise lines, but Nike tomorrow or Tuesday. We'll see what happens there. Did you see the Swedish registrations? I didn't see the exact Swedish ones, but I know European in general was down about 37%. So yeah, Europe wasn't that good. But I think in the United States, bro, just like anecdotally, the amount of people that have been inquiring, Tesla's also running a ton of advertisements about an EV, not just a Tesla, but an EV because of the tax credit ending. I think Rivian, Tesla, Polestar, Lucid, I think all of them get a little bit of a boost. Hopefully Tesla gets a really big one because it's Tesla at the end of the day. But I think maybe North America is enough to get those numbers up. And if they are, then that would be good for Tesla. All right, here we go. Overnight markets are open. Let's see what we've got. Hoodie opens 121.87. That's down about 0.64% on the day. For Hood, Palantir, that's down about 0.03%. Nvidia's up a little bit. Tesla is up $2. Tesla's up 0.5%. SoFi down a little bit. Google's up a little bit. Grab up a couple cents. Where is BMNR? Let's see how that one's going. S&P is also up a little bit. BMNR 52.79, not bad. It closed at 50. Again, low volume on these overnight markets for Bitmain, but Ethereum is up, so that's why it's probably moving. S&P is up 0.12, 662. Again, 667 we hit earlier this week. Bitcoin 2.34%. TLT's up a little bit. App 11, that's up almost 1%. We are pretty flat across the board, although we are green. Intel up another $1.50. Wow. Intel's up 4.5%. Now, again, Intel was up above this, and now Intel's flat, 35.42. Okay, so Intel's kind of basically where it was on Friday, but it closed at 35.42, which was really nice to see. It got to 38 at one point last week, and then it came all the way down to 35. I don't know if this thing's going back into the low 20s, dude. I think there's too many forces, whether it's Apple, the United States, TSMC, NVIDIA, SoftBank. There's just a lot of different things that are participating to get people excited about Intel. And that might make it hard for that one to tank. Now, the investing futures in general, S&P, small caps, NASDAQ, and the Dow Jones, those are green. But again, you can see they're pretty flat. So not too crazy. And that's not moving too much. Coinbase, let's see how that one's doing. Are we green? We should be green on coin. We are green by about 1.6%. MSTR, are we green? We're green by about 3.4%. 318.99, which should help out Misty a little bit. Should help out Misty a little bit. BMNR, we up 5%. Again, very low volume on Bitmine, 53, but it's good because, I mean, it's just tracking back to where Ethereum is. So it makes sense why that one is getting some green. AMD right there, that one's also flat. SMCI, that's flat. Ethereum, that's up 3.5, 4140, maybe 3800 was the bottom. Maybe. Would be nice to see. But Intel, up 52-week highs, that's green. Trump tweeted about cannabis. All right, let me see. Trump also tweeted a picture of, dude, he tweeted a picture about Jay Powell. It's basically him firing Jay Powell. It's like a meme of him firing Jay Powell. We'll see the cannabis tweet in a second. Ethereum right there, 41.42. Meta, that's flat. Amazon, that's up a little bit. Yeah, there's not a lot of movement. Grabs at 611. SoFi's back above 28. I mean, you got a lot of green for sure. Robinhood's at 122, Palantir 178, Tesla 445, but it's not massive amounts of green, which I think is also healthy. If we can just end out September at the level that we are at right now, I think people would be happy. But we got to see if that ends up playing out. Amit, a Roddy Messenger tops India's app store. India's WhatsApp replacement is a big move, number 13 in Canada. Oh, Roddy Messenger? Does anyone know about that app? That's the first time I'm hearing about it. Oh, Roddy Messenger. Is it in the United States at all? Huh, that's interesting. Oh, yeah. Wow, it's number 26 in the United States in social networking. Dude, it's not easy for messaging apps to grow. I mean, well, it is easy if they get like a little bit of a viral loop. Then it's like, it's very easy for them to just keep expanding. But for them to go from 0 to 1, especially with WhatsApp in the world and Telegram, like that's not easy. That's something to keep an eye on. A Roddy Messenger. Huh. It's made by Zoho. Zoho is another company that does a lot of email services as well. A Roddy and Tummel means chit chat. Dude, this is the beauty of technology. Like you would think WhatsApp and Telegram are in the lead and like no one can mess with them. And then you got this brand new company out of nowhere. That's number 26 in the United States, number 1 in India, 13 in Canada. Like that's crazy, bro. Just shows how hard it is to be a tech company and maintain your moat. You have to fight off all these competitors constantly. And there's something about a Roddy that's getting people to download it. To me, it just looks like a basic messaging app, but I would imagine there's something else that's getting people excited. Zoho is huge. They actually are a private company. They haven't been acquired yet, right? Zoho. No, they haven't been acquired yet. And I think this is an Indian company as well, but they've been private for a very long time. They acquired MailChimp, right? I'm pretty sure they acquired MailChimp for like 12 billion. No, Intuit acquired MailChimp. Okay, I was thinking about the wrong company. But Zoho's still a big company that's out there for emails. Alphabet right there, 247. That is slight. Yeah, bootstrap for the past 30 years, exactly. Alphabet 247. Wow, look at this. We got pretty much green across the board. Salesforce, Meta, Amazon, Reddit, Grab, Google, SoFi, AMD, NVIDIA, S&P, Palantir, Hood. ELF is red. SMCI is a little red. Enphase and Microsoft a little red. And Roblox a little red. Everything else is green. The green is not a lot of green. The red is not a lot of red. So I would say it's relatively flat, but pretty much continuing some of the action we saw last week on Friday, which is not too bad. A lot of native Indian sentiment going on due to Trump tariffs. That could be your argument. People rejecting American products for homemade Indian companies because of the tariff war. It's just, dude, it's hard to get off WhatsApp and YouTube and these American tech, especially in India. I mean, Indians are hooked onto Facebook and Instagram. I think like that country is definitely the number one for YouTube. I don't know if it's number one for Instagram. It's absolutely number one for WhatsApp. Brazil might be competitive with India for number one for WhatsApp, but you know, when you have 1.3 billion people, this is why China doesn't allow American tech companies, because China knows, like, if we want any chance to compete, we have to make our own version of Google and YouTube and Facebook and all this stuff. But India lets them in, and you know, so far they've done very well. All right, cool. So overall markets overnight, nothing too crazy. Let's get into a bunch of the different headlines we have. Steve will be joining in a bit. Steve did write up. Let me just link this right now a post on the AI bubble, and that will be the topic of conversation. I know a lot of people are asking about it. And the title of his post is "The AI Bubble Doesn't Exist and the Bears Are Wrong." So kind of his core argument is no, there is no bubble. And yeah, we will talk about that when he gets onto the stream and keep going from there. All right, so let's get into some of these headlines. Artist here, thank you for the $10 super chat. Heat is the greatest movie ever made, and your sacrilege is the reason why I'm passively aggressively sending you a low super chat. Look, we can agree to disagree. We can agree to disagree. That's all. Again, Steve told me to not actually say my thoughts on this movie publicly. So all I'm going to say, it's a movie, and I watched it. And that's my analysis. And we are free to disagree, Artist here. Respect, but now greatest movie of all time. I respectfully, I don't know how anyone could say that, but it is what it is. It is what it is. We disagree. We just disagree on that. All right. So, Artist here, thank you again for the super chat. Appreciate you. S&P right there, again, is flat right here. Tesla's the one that's winning the most in the overnight market so far, 445. So we'll keep an eye on that. But that's what you got in the overnight markets. All right, let's get into some of these headlines. So here's the first one that I don't think a lot of people saw, but it's definitely really interesting. And I saw this morning in the Wall Street Journal, and I quite frankly couldn't believe it. And it goes to show a lot about the state of not only the stock market, but the nature of how America is being perceived by the credit market. So Microsoft's corporate bonds have a lower borrowing cost than U.S. Treasuries. This is crazy. And the reason this is crazy is because the fact that investors are willing to give Microsoft's bond market a lower yield to maturity, aka they're asking more from the bond market in the treasuries, particularly for the 10-year treasury, which is what this one is comparing for a higher yield than Microsoft's corporate debt. You would think Microsoft has way more risk because it's a company than the United States of America, because it's a country and it's one of the most powerful, it probably is the most powerful country on the planet. Nope. The credit market is saying that the United States debt is more risky than Microsoft's debt. And I thought that was fascinating today because it gets into the broader conversation around something that Goldman said last week, which is that cash is essentially trash. They said, hey, if cash becomes useless, then you might as well put it anywhere. And I think that is a theme that is not going to go away in 2026. I think that's very important for us to all recognize that if rates are coming down, whether you're a believer of an AI bubble, no bubble, whatever you think ideologically about the market, if rates are coming down and cash is not where you want to be, because the United States Treasury cannot give you a better yield than Microsoft, which I would say Microsoft has way more risk than the U.S. government, which is backed by like the freaking army and military. Like there's two different level playing fields there. I think that goes to show that more and more people are starting to transition money. And that probably also is likely the reason why you're going to see a little bit more of inflow into equities over the coming weeks if we end up getting that rate cut. Now, the money market funds didn't necessarily agree with that last week. We got a decrease 2 weeks ago. We got an increase of 31 billion. So that goes to show there are still people that are scared of putting their money into the markets, and maybe they need to get an even juicier rate from the stock market, or a juicier risk reward, given that the equity markets or the money market funds are still giving them 4%, 3.75%, which still, if you have $10 million and making 3.75%, you can definitely live off that. It would have to probably come down closer to 3%, I think, for the markets to really get afraid, or for money market funds or fixed income folks to be afraid and take more risk. And so that's definitely one thing we want to keep an eye on. But that's another reason why STRC has a bid, right? All these strategic fixed income products from the MicroStrategies of the world that are giving way more. I mean, even Oracle's corporate bonds are giving about 6.5%. So you do have a different level of risk that is being taken on treasuries versus company debt. And I just could not believe today when I saw that in the context of Microsoft. But goes to show how the credit markets are thinking of debt spending, deficit spending, and then overall the state of the United States. Now, that transitions us into this topic right here, which is that in the month of September, traders have pulled $2.3 billion from SOXL, which is a triple leverage ETF tied to semiconductors. And it goes into the broader discussion of $7 billion of net outflows in September from leveraged ETFs. Now, I showed a chart, I think 3 weeks ago. Some of you guys might remember, there are over 4,200 different leveraged ETFs. long NVIDIA ×2, short NVIDIA ×2, long Palantir, long Hood with leverage, triple leverage, short small caps. I mean, there's so many of these products that are Misty, all the Yield Max. Those are all these leverage different types of ETFs that are essentially pitching themselves as a way to gain more exposure to the upside or downside on an underlying equity or the flatness of an equity when we talk about these Yield Max ETFs. But the fact that we actually had $7 billion go out of these products in September, to me, number one, is kind of healthy because a lot of this stuff is traded through retail. I mean, the institutional guys play with these products as well, but retail really likes these products for more upside or downside momentum, particularly around earnings events. And some of them trade them as long-term strategies. Another example, our good friend Garcia, I showed his channel or his Twitter post a couple of days ago. He sold all of his Rock Lab, made like 120 grand. And I think he was long 10,000 shares of TSLL at like 330. He bought it. Tesla's now at 440-ish. And so I don't know exactly how much he made, but whatever price was TSL. It's like 15 right now or something. He took profits, 21. Never mind. He probably took some juicy profits. I think he got in at like 12 or 14. And so like he's a retail investor, and he's an example of a retail investor that rode up Tesla via double leverage and made some money off of it. I think it's actually healthy that some of that money is coming out of those types of products, hopefully going back into just general equity. So you have a little bit less froth on some of those individual products. I mean, even Misty, I think, was at 6 billion AUM. Now it's at like 4.5 billion. So that's 1.5 billion that has been taken out of that product and probably transitioned into another type of a product, maybe another leverage type of ETF, but maybe just into MicroStrategy stock, which one could argue is safer. And I don't think that's the craziest thing in the world. So you are seeing a little bit of that momentum start to die down, which again, I do think is not too bad. Isn't reducing leverage a de-risking event, aka a good thing? Exactly. So to me, I saw that data, and like, you know, the people that manage those leverage products probably don't like it, but as a retail investor that just does not want to see froth in the market or wants to see froth contained in a certain subsector of the market, like I can deal with the quantum froth. I can deal with some of the Oklo froth, but when you have entire ETFs tied to really important companies that are frothy, like that's just not the best thing in the world. So then we got this update right here on mortgage rates. A growing percentage of Americans are facing higher mortgage rates. 22% of mortgages in the US now have higher rates than 6%, the highest in 12 years, obviously because we raised rates the highest in 40 years. This percentage is 6 times higher than it was in 2022. At the same time, 30% of mortgages carry rates between 3 and 4%, the lowest in a decade, which is, you know, if you were lucky enough to buy the house in 2020, 2021. And additionally, 23% of mortgages have rates below 3%, the lowest percentage since 2021. So what does this mean? We got housing data a couple of days ago. We got 850,000 new homes that were sold in the month of August, which was way better than the 650,000 that was expected. And then we had 4 million homes. I think it was 4.02 million homes that were sold versus 3.96 million homes that were expected. So the housing market's heating up again. And new home sales, I think, is the best indicator to show that. But even with the 25 basis point rate cut, you're not seeing mortgage rates necessarily go down. And this is the fear that a lot of the credit markets have, which is that, hey, if the overall perception of inflation is not going down, the 10-year right there down a little bit at 4.16, then mortgage rates are likely not going to come down until we have a dramatic reduction of rates, which is obviously what Trump and Besant and Lutnick really want to see happen. But time will tell if that one ends up playing out the way that people want it to play out. So I think we're gonna have to see. But so far, if you're in the market for a house, I mean, the new home sale demand kind of shows how many people have just been waiting, even off the perception. Bid9, right, they're up 5% of rates coming down, and that's why I think we had a massive surge in August. And then September, we're gonna see if that ends up playing out the same. Lennar and KBH and DR Horton, they went up a little bit last week, up about 3% in general for the home builders. Zillow and Opendoor are the big ones. Zillow, I mean, yeah, it went up 2% on Friday, but a relatively flat week. Opendoor, this is the one that's, we're going to see what ends up playing out. It fell from $10.50, got all the way to $7. Then you had a rebound when the housing data came out. So, I mean, this one is going to ultimately test if their margins can squeak something out and more profitability, even with increased home sales. But that is one that definitely relies on the overall housing market as well. Cool. So that's what we got in the context of mortgages. Now, gold, how's that doing right here? We're at 37.73. That's basically all-time highs. I don't think we cracked 3,800. Silver is also at 46.48. That has not changed too much. Gold and silver, the question that I keep getting is that what is that telling the market? I don't know, dude, because usually it's telling us, hey, maybe equities, you should not be that rooted in risk, simply because of the fact that gold and silver are more risk-off assets that you buy in the face of a recession or in the face of something bad happening, in the face of geopolitical crisis. This stock market has just completely flipped that upside its head. Everything is starting to get momentum, and it's kind of an everything rally. And by the way, it likely continues. This is the fourth quarter analysis. Historically, S&P 500 index average quarterly returns from 1950 to 2024. Fourth quarter, up 4.2% on average, 80% of the time. So I don't know if gold and silver is telling us that stocks are going to tank, because again, it goes back to what Goldman Sachs said, and Goldman Sachs is not the only one, but a lot of these investment banks are coming out saying if cash is not where you want to be because the cost of capital is coming down and the return you can get on that capital is simply not as good as what you could get 2 years ago, then you're going to have to put that money somewhere. Whether it's gold, whether it's Bitcoin, whether it's equities, whether it's silver, whether it's copper, whether it's Palantir, whether it's AMD, NVIDIA, S&P, like whatever it is, it's better than just holding on to an asset like the dollar that is actually down 10% this year, 98.07 right now on the dollar. And I don't know if that changes. And by the way, Trump likes a low dollar. I mean, Trump gets a lot of shit sometimes when he says this, but he knows that to really engage with the countries that want to trade with us, we need that dollar to come down so it's easier to trade with them. And, you know, he's been pretty public on the fact that a low dollar is not the worst thing in the world. So if the administration is geared towards having a low dollar, or at least they're not like obsessed with getting the dollar to be higher, then I think cash likely continues to be trash. At least if the rate cutting cycle follows up. Sherp said, as Tom Lee said, housing is too high, dollar is losing value, interests are coming down. Where else people put money? In the stock market. Yeah. It's not a complicated thesis. Tom Lee, Mike Wilson, like all these guys are not saying something that's so like prolific that it's hard to understand. They're just like, hey, there's when rates come down, like it's for a lot of different things, right? If you're borrowing money as a business and your cost of borrowing has come down, you have extra cash that you can use to grow the business. Hire employees, which stimulates the economy because that employee now has an income and they can start spending on goods and services, which should help companies because companies have more potential for earnings if more people are spending money. Like it's hedge funds that use margin, right? If their cost of capital on that margin goes from like 7% to 6%, then they're able to buy more equities because they're able to pay less in borrowing costs, and then they're able to do more trades with those equities. I mean, there's just so many different ways the entire global financial system benefits from lower rates. Now, the risk here is inflation, but if that risk is avoided, which Jay Powell, again, over the week, when he was doing his press conference, that kind of caused that little intraday decline in the S&P 500 when he said stocks are fairly highly valued. Even he admitted that maybe tariffs were a one-time thing in terms of the inflationary impact from them. And if that is true, if he's right about that, then I don't think the Fed is going to be as worried as, you know, what some people think. This is what Jay Powell said on Wednesday about the nature of tariffs.
We're collecting a good bit of revenue. The government is, federal government, collecting a good chunk of revenue, at a $300 billion a year pace. And the question is, who's paying that? And the candidates for paying that, those tariffs, would be the exporter, the foreign exporter, or someone on our shores. It could be a company or a retailer, or someone is using the imported product to manufacture something, or the end consumer. And so so far, and it's incredibly early days, it doesn't look like the overseas exporters are carrying the bulk of it. It looks like it's that middle group. It's retailers and it's importers, and they're not passing along to consumers that much of the cost. So the actual effects on inflation have been quite modest so far. It's really not. It's a small amount, but I mean, for example, I mentioned that core PCE inflation is 2.9%. Maybe 0.3 or 0.4 of that is tariffs. So it's not the big factor. It's not a big inflationary thing, but it is something that is driving up inflation a bit. And the question is, are companies then, are they going to eventually be able to pass that stuff through? And then that might drive inflation up a little higher. So we've been watching this since the beginning.
So you got Jay Powell basically admitting, hey, there might be an impact, but if there's not really that big of an impact, then rates can come down without the fear of inflation spiking up, which would be bullish. Which would be very, very bullish. By the way, on the Tesla poll, so we have below 440 is the majority of you. I'm definitely not muted, bro. There's no way I'm muted right now. There's no freaking way I'm muted, bro. There's no way. I'm gonna make sure. You guys gotta stop doing that, bro. Because like I'm actually gonna Thank you. You're not muted. Okay, good. Yeah, I'm not muted. Dude, it's a fun joke sometimes, but other times it's like just gonna just mess up any of the ability to like talk about these topics if I'm constantly questioning I'm muted. Now, granted, I should be smart enough to know that I'm not muted, but still, it's not fair. It's not fair. Okay, so what was I saying? The poll is below 440, 31% of you. So most of you guys a little bit more bearish on these deliveries. 450 to 475, 24%, 500 plus 25%, and 447 consensus, 20%. Your opinions on heat should be muted indefinitely. Okay, maybe they should, which is why I'm not saying them. But if I did, no, I'm not, because I'm not. If I did have to say my opinions, I still wouldn't say them because I don't need the backlash, but I will keep those muted. All right, so 440,000, you guys are saying below that. I don't know, bro. I think we come in closer to 475. If we come in below 440, I don't think that's going to hurt Tesla dramatically, but consensus is 447. Below 440 definitely would not be the best. Definitely would not be the best. So, all right. So we'll see on Tuesday how that ends up playing out, but hopefully it's in the right side for the Tesla bulls. All right. Two last things before we get Steve onto the show. Number one, this is a chart I saw this week that I thought was very important as well. This is from Fundstrat. It is helpful to look at the S&P 500 compared to its 200-day moving average. The current number is at 10%, but that's not when we've seen local tops. We've generally seen local tops when this number is somewhere between 13% and 15%, not at 10% as a percentage of its 200-day moving average, which would imply the whole overbought thesis and would kind of signal a correction. That number is actually 69.50. That number is 69.50. So it's going to take some time to see the market get super, super overbought. At least another 3-4 percentage points on the S&P 500 historically from a technical perspective. But if that doesn't happen, then likely the 66-70 level is not overbought. And then final chart right here that I thought was also pretty important is the amount of households that own equities. So take a look at this right here. 32% of total U.S. household assets are now equities. Real estate's at 30%, insurance and pensions are at 21%. By comparison, in China, real estate is 55%. And if you know anything about China's real estate market over the past basically decade, it's not been the best. Equities only make up 11% in China. In the UK, Korea, and Australia, households own 57%, 65%, and 57% in property, while equities only represent 7%, and 8%. In Taiwan and Japan, households have 35 and 30% of their wealth in real estate, 12 and 20% in equity. So you're seeing that the United States in particular has the highest exposure of equities across the world at 32%. Every other major developed economy that you look at, you're not seeing anywhere near 30% of overall household assets as a percentage of equities. Now, why does this matter? To me, this goes to show that the U.S. is the only game in town. The U.S. market is the market that people want to invest in. A lot of those equities that people have in Japan or South Korea are, United States stocks at the end of the day. And if there is some massive bubble that is forming, it's going to hurt the United States the most because, 32% of U.S. households don't have their money in real estate or gold or silver, but it's the stock market. So the point is there is an incentive intrinsically, structurally in the United States to have money in the stock market and for that stock market to outperform. Now, obviously, the market's got to put up the earnings growth that is necessary to reward it with the multiple that we need to see. But yeah, 401k probably a big contributor to it. But the fact that the market is as big as it is, and the fact that people willingly want to contribute to their 401k, and we're seeing an entire new generation of investors say, "Hey, I'm going to download Robinhood, I'm going to deposit a couple $100, and I'm going to begin my life as an investor," I think is very important. And hopefully that continues. And if that does continue, then I think there is a lot more room for the broader markets to benefit long term. Having said that, someone has written up a very large post this night on the nature of the markets and what is going on with those markets. And the title of that post is "The AI Bubble Doesn't Exist. The Bears Are Wrong." To talk more about that on this lovely Sunday night, ladies and gentlemen, Mr. Stephen Fiorillo. What's up?
The Mets did not make the playoffs.
Yeah, I actually saw that. And
Wait, you saw something that
It,
was not
it,
related to finance?
it popped up on Twitter because ever since I started following PSU and Oregon, I've actually gotten a decent amount of football content and sports content in my feed.
Interesting.
And I saw that and I was like, who cares about the Mets? Aren't the Yankees like the most important?
Yes, they are. Just give me 1 second.
Like I was just like, yeah, the Mets are cool, but the Yankees are the real New York team, right? So yeah, I was perplexed by how much people cared about it. But are the Packers playing today? What's going on with the NFL schedule? Let's see.
It's a big deal because Steve Cohen promised a World Series in 5 years, and that's definitely not happening since he took over.
I forgot Steve Cohen owns the Mets. Yeah, you're right.
So Bobby Axelrod bought the Mets, and he's not delivering. And he thought getting Juan Soto from the Yankees was going to be this huge move, and I was one of the only people saying I'd rather have Bellinger than Soto. And it looks like Soto's he's a great player, not worth the money.
I've heard of Soto before. I don't know too much about him, but his name is like that big that I think he's known pretty well. But all right, Mets not going to the playoffs.
Nice big glass of chocolate milk is pretty good at night.
Do you really have chocolate milk?
Yeah, I actually had to go get a paper towel because I spilled some.
Dude, you are a kid. You are a literal big kid. That's what you are. Like
what?
It's chocolate milk. I'm just saying. I don't think I've drank chocolate milk in like 5 years or more than 5 years, dude. I don't.
It's delicious.
All right.
Absolutely
well,
delicious.
All right. Let's get into it. So this was a big post tonight. I think you've been meaning to compile your thoughts for a while on this. I want you to give me a summary on this, and then we'll go deeper into the details. But the title is.
I've already started getting phone calls about it.
Okay, so it's pretty controversial. So I'm curious, kind of, what is the overview around the AI bubble not existing, and why exactly are the bears wrong? And then we'll get into the details of what.
So, look, for anybody who reads the entire thing, I go pretty in depth about this, and I make it very clear that there are certainly companies that are overvalued and have no business trading where they're trading. But those companies, I'm not going to name any specific names, but those companies are not the ones that are spending the money to build out AI. Now, when you look at why the dot-com bubble actually burst, Fed was raising rates to combat inflation, and venture capital was pouring tons of money in because the internet changed everybody's lives more than anything in the past 5 decades. It was a gold rush, and companies were expanding and trying to figure out ways to build businesses without having enough revenue or being pre-revenue, and the bubble ended up popping. Rates went up, couldn't roll over debt, whole big mess. Venture capital wasn't able to be paid back. That's not happening here. So you have the 4 largest companies in a prisoner's dilemma. Look at you drinking water. So proud of you, staying hydrated. No, you got a sweatshirt on, drinking water, trying to stay hydrated. Can't tell me it's that cold in your freaking home.
It is. I keep the studio very cold because I'm moving so much with my hand. Dude, it's like a legit workout. Like I'm sweating after a 4-hour market open. So I have to keep it super cold in here.
So when you think about what Microsoft...
Oh, by the way, it's from your favorite company.
Who?
The company that's trading at a better multiple than NVIDIA, dude.
Yeah, that's a whole nother thing that's insanity. But
it's great water, bro. It's great.
Look, Microsoft dropped the gauntlet down. Last week or the week before, they came out and more than doubled their investment in Wisconsin. The first data center was a $3.7 billion project. They came out, they're spending an additional $4 billion. And here's the biggest thing. Hundreds of thousands of NVIDIA GB200 GPUs. And they said, they made a direct statement to everybody else that this will be the most advanced data center anybody has ever seen. And they came out and said that they are going to spend $100 billion plus on CapEx this year. Microsoft is not tapping the debt market. Their long-term debt is actually going down, and they're still able to generate so much in free cash flow. I think it was something like 65 to 70 billion in free cash flow for fiscal year 25, which allowed them to buy back tens of billions worth of shares and tens of billions allocated to the dividend. These are not companies that are building this out from debt. They're not tapping the debt market. They're not having venture capital back them. They are doing what they feel is right. And who am I to question what Nadella, what Jassy is going to spend their money on? And when you really look at it as an aggregate, they're on track to generate, probably close to 400 billion or so in free cash flow this year, if not more. Free cash flow. That's after they spend the CapEx. So if they're able to allocate the CapEx, say CapEx is going up, conduct buybacks and dividends and still make acquisitions, like Microsoft, they just acquired Activision Blizzard last year. They made the huge investment in ChatGPT, and their debt's going down. Alphabet's got almost 100 billion in cash on the balance sheet in current between cash and short-term investments, like another 50 billion in long-term investments. They're the ones telling us we're not stopping. So if they're not stopping, I don't care if you have an energy company that's pre-revenue that has a $16 billion market cap. That may be overvalued, maybe it's not overvalued. I don't care if there's software.
So let's double tap on that. So Oklo, for example, 20 billion, no revenue. The bears will say AI is a bubble because of that. Why do you reject that being a defining thesis for a bubble?
Why does Oklo have anything to do with AI? That's my thing. It's
AI requires energy, and Oklo is an energy company.
It's an energy company that's getting a bid because of the promise of future revenue from small nuclear reactors. That has nothing to do with the AI build out. When you really think about it, we could get energy from other places. Just because an indirect beneficiary is getting a bid doesn't mean that we're in an AI bubble. All the companies that are spending money, they're doing it from their profitability or from cash from operations, is a better way to put it.
So if Oklo were to go, at what point? So it's 20 billion. If Oklo got to 100 billion, would you say would you get scared, or how do you think about it then?
I will say that I think if we go into a recession, which I do think is going to happen next year, at this point, I think that you're going to see the companies that have really high valuations get slammed because people are going to get their money out because they're probably going to need it. That's not going to impact Microsoft, Amazon, Meta, or Alphabet. If we go into recession, they're not stopping spending because they all have to stop. One of them cannot take their foot off the gas unless all of them do, because then they run the risk of running behind.
Okay, so when you mean recession, how do you kind of define that? Do you mean more technical, or do you mean like actual stock market drawdown recession?
No, I mean an actual recession. Unemployment is at 4.3%. People want to say it's still historically low. Okay, great, it's under 5%. But here's the thing. It was 3.4% in 2023. So you're up 0.9%. Every time historically that unemployment has gone up by 1%, we've either been in a recession or recession just started. If we keep going up, the chances of a recession are really going to go up. And we may have it next year, especially when you compound that with more jobless claims, AI getting more advanced, companies looking for ways to implement AI. So yes, I'm worried about a recession next year, but I don't think it impacts the big four. I don't think it impacts Oracle, and I don't think it impacts the demand of cloud services or businesses implementing AI, because they're going to look for ways to be more efficient. And
okay, so let me ask you this. If we get to S&P 7,000 and your recession thesis comes true, do you think S&P is still above 7,000 by 2026 or no?
Here's the thing. I don't know that at this point they have to correlate to the same thing.
That's what I was getting to. I agree.
I don't know that they have to. I think I'm going to have to see the data about what corporate earnings look like. Because if we go into a recession, you may see the really big companies, you may see their earnings be fine. I think it'll matter for the broader market, but we'll see.
And the margin enhancement via AI might make their earnings even better in a recession, because they're definitely going to lay off more people in a recession, but their margins might not necessarily suffer unless demand.
I think that it's a much bigger question about what happens. And I've been banging this drum that I think that there is a very serious problem looming over the next 5 to 10 years. And I don't think we're ready for what AI actually means. And there's going to be a lot of jobs that are going to be at risk, and we need to figure something out. And I wish politicians would stop arguing about what they're arguing about and start figuring out what they're going to do when AI gets very sophisticated and when robotics gets very sophisticated. To me, those are the two biggest problems right now. We need to figure that out.
Okay, the next part of your article or your post right here says bears are pointing to consulting firm basically reports that AI can't generate an ROI. What is your response to like the MIT studies that bears point to that AI is worthless?
No, it's right there. McKinsey came out and said that AI could unlock 4.4 trillion of annual productivity growth from corporate use cases. I mean, the bears want to cite a lack of demonstrable ROI. Got news for everybody. Cash from operations from the big four is going up. Part of that is due to implementing AI internally, allowing for generative AI to be features in their cloud services, and we are seeing an ROI on it. And what does Ives always say? You can't find AI in a spreadsheet. I think this time you can. I think this time you can see the amount that we're spending, the amount that they're generating, and it's not stopping. This is not fueled by debt. That's the biggest thing right now. So if there's individual companies that are smaller, that are overvalued, has nothing to do with Microsoft, has nothing to do with Alphabet. Those companies could go down 50%. Doesn't impact them one bit. Like there are always, it doesn't matter what market you're in, there are always companies that are overvalued.
I agree. I also think a lot of those studies are like kind of pointless because like if you look at Palantir's case studies in the enterprise compared to whatever the hell MIT said, it's night and day. So it's like, and this happens during every type of cyclical time in the market where this study comes out or this person comes out who has a big reputation and they say XYZ, and either that person is going to be completely right, and that was the turning moment when everyone should have been paying more attention, or it's just another person talking to talk and it doesn't actually have a real impact. And I think some of the studies that have been coming out as of recent, yeah, you're not seeing the AI return in the enterprise because it's very early, very new. But then I look at Palantir's earnings and I'm like, well, there's like 17 different examples in one slide deck, you know. So I think it's going to take time, but I don't think that's a determining factor of AI being a bubble. We're seeing zero ROI from AI.
Look, if AI, these are arguably the best CEOs in the country, the best and brightest on the boards. You're telling me that all of these companies are wrong and they're allocating capital frivolously?
Also, we need to double click on that. Like, this is not just an appeal, someone who disagrees with this would be like, oh, that's an appeal to authority. You're just saying, oh, because Zuckerberg's smart, that you're like, no, this is unanimously every single successful person on the planet that runs a major corporation.
But unilaterally across the biggest companies in the market, they're all saying and doing the same thing with their capital. So yeah, they're the ones that shape how technology is used and how technology grows. They're telling us that this is what's going to happen. Who's going to stop them?
And every government is acknowledging they need to prepare for this stuff.
Yes.
Like the amount of conferences that Larry Ellison or Sam Altman or Elon Musk attend across the entire world talking to sovereign leaders about, hey, this is how you need to be prepared for this new revolution that is going to fundamentally transform wealth inequality, jobs, education, healthcare. I mean, Like, this is a real thing that's happening. And that's why I think your point gets the heart of what people that are bearish don't understand, which is that this is already changing everything. And the money that is necessary to keep it continuing to change everything is being done via free cash flow, not the debt markets. And that's something that I don't think we can deny.
I just don't know why people want to go against multi-trillion-dollar organizations when they are all telling you the same thing.
Well, what if you had to get your best guess, why are people screaming that it's a bubble?
I don't know. They either missed the investment on the upside so far, or they remember what happened in 99, 2000. They remember what happened in 08. They remember what happened in 21. And they feel like it's too easy where you can just throw a dart and everything's going up. I mean, once again, you have the Saudis making huge investments. You have the Middle East making huge investments. You have China making huge investments. This isn't just companies, it's countries. Like, this is not going to change. And this is where I would push back on every bear. Show me a single time in the past 100 years when we've ever went backwards in technology. I'll answer. We never have seen it.
No, never.
Analog cell phone comes out. Did it stay analog? No, it went digital. And then it went PDA. And then it went smartphone. Every iteration just gets better. Look at what the type of computers you're able to buy in 1998 and look what you have now. No matter what it is, no matter what the product is or the technology, there has never been a time in modern history where we have went backwards. So why are we going to say it's going to stop now? It's crazy.
You have some sovereign leaders right here that are meeting with Elon Musk over the weekend around showing off Optimus. Like, Optimus is the worst it is ever going to be in 2025.
Right. It's only going to get better.
It is only going to get, I mean, like, yeah, this point about Wi-Fi on airplanes, dude, even a year ago when I went on flights, Wi-Fi was horrible. Now I can actually watch YouTube videos on the flight. I think thanks to Starlink and
right. People have Starlink now. I mean, it always gets better.
When robots begin using AI, the usage rate will grow by orders of magnitude. I think that's the other thing. And this is what Gerstner was saying on the podcast with Jensen, is that people really, actually, I should play this clip because this is the end of the podcast. I don't know if people have seen it yet. People underestimate exponentials and how things can exponentially change. And when they happen, it's hard to recognize how aggressive they are. But the fact that we are living in a time where it could happen is the exciting part from an investment perspective. This is Jensen's thoughts on kind of how the world plays out over the next 30 years.
Before you play that, do we really think that when humanoid robots actually go into full-blown production, they're not coming out with Grok already embedded in the chip? Like, do we really think that?
No,
like,
I agree.
Of course that's going to happen.
And then that's going to require even more compute for training the model, because now you're going to just be talking to a robot for the you're not going to have to type stuff in, right? And that just requires that's why I think this data center stuff is not a joke, and that's why there's so many opportunities to invest in it. Because obviously, as the demand for more compute and reasoning increases, the more data centers you need.
Are famously skeptical and terrible at understanding compounding systems. And they're even worse at understanding exponential systems that accelerate with size. Mm-hmm. We've talked about exponentials a lot today. You know, the great futurist Ray Kurzweil said, in the 21st century, we're not going to have 100 years of progress. We're likely to have 20,000 years of progress. Right. You said earlier, we're so fortunate to be living at this moment and contributing to this moment. I'm not going to ask you to look out 10 or 20 or 30 years because I think it's so challenging. But when we think about 2030, things like robots.
30 years is easier than 2030.
Oh, really?
Yeah.
Okay. So I'll grant you license to go out 30. As you think out over the course of, I like these shorter time frames because they have to marry bits and atoms. More important. Bits and atoms, the hard part of building this stuff, right? Yeah. Because everybody's saying it's going to happen.
Science fiction's interesting, but not helpful.
Exactly. But if we have 20,000 years of progress, reflect on that statement by Ray, reflect on exponentials and how all of our listeners, whether you work in government, whether you're in a startup, whether you're, running a big company, need to be thinking about the accelerating rate of change, the accelerating rate of growth, and how you will, be co-intelligent in this new world.
Well, there are a lot of things that many people have already said, and they're all very sensible. I think the in the next 5 years, one of the things that is really cool that's going to get solved is the fusion of artificial intelligence and mechatronics, robotics. And so we're going to have AIs that are going to be wandering around us, and that everybody knows. We all know that we're going to all grow up with our own R2D2.
Yeah.
And that R2D2 remember everything about us and coach us along the way and be our companion. We already know that. Okay. And so the idea the idea that every human will have their own GPUs associated with them in the cloud, and that there are 8 billion people, 8 billion GPUs, that's a, viable outcome.
Yeah.
And
each having their own model is fine-tuned for them.
Fine-tuned for them. And that AIs in the cloud is also embodied in a whole bunch of, it's embodied in your car, it's embodied in your own robot, it's everywhere with you. Yeah. And so that I think that future is a very sensible thing. The idea that we're going to understand the infinite complexity of biology and understanding the system of biology, and how to predict it and have digital twins of everybody. Our own digital twin for healthcare, like we have a digital twin for shopping at Amazon. Right. Why wouldn't we have our digital twin at healthcare? Of course we would. And so, a system that predicts how we're going to age, what disease we're likely going to have, and anything that's about to happen, maybe even next week or tomorrow afternoon, and predict it early. Of course, we wouldn't have all that. And so, I think all of that is a given. I think the part that I'm asked a lot by CEOs that I work with about, now, given all of that, what happens? What do you do? And this is a common sense of things that move fast.
Right.
If you have a train that's about to get faster and faster and go exponential, the only thing that you really need to do is get on it.
Yeah.
And once you get on it, you'll figure everything else out along the way. Right. And so to predict where that train's going to be and try to shoot a bullet at it, or predict where that train's going to be and it's going exponentially faster every second, and go figure out what intersection to wait for it, that's impossible. Just get on it while it's going kind of slowly, and go exponential along the way.
It's kind of crazy because that is not what the Bears want to do. They want to say the train doesn't even exist.
Well, the Bears can't even comprehend that we're going to have little droids rolling around with us.
Yeah.
Why does everybody think that that's such a far-fetched thing? Like, I am going to buy an Optimus robot for my parents when it hits the market, or when I'm able to buy one, because obviously there's going to be a wait time because of commercial, et cetera, et cetera. But I think a lot of people are missing the idea of how impactful this stuff is going to be, and the amount of compute, as you said, that's going to be needed for all these things. I just don't think people actually get it.
I think unlike the Vision Pro, which I publicly said when it was announced was a really stupid idea and was not the age of AI that people should be excited for, a robot is the opposite. A robot is something that is productive, can do things for you, and you can talk to as if it was, ChatGPT on your phone. And that I can see a real use case that can scale to literally billions of people. So there's going to be some products that just don't work, that are like the new version of how we engage with the world via AI. The jury's out on if the glasses are going to work. But a robot is going to work. And if it does work, the amount of industry, the amount of compute, the amount of training that's needed to make those robots effective, not only in our homes to do the dishes, but in like an Amazon warehouse to pick up packages, that in and of itself is one part of a massive start. Like that alone could push back against a bear thesis on AI, not to mention all the other stuff we have. Well,
I think the big thing that people are overestimating is how many people are actually going to go get one of these Optimus bots. Look, Elon said in a different interview 20 to 25,000, and he's hoping it comes in around 22. Now, that may sound like a big number, but you know they're going to have financing packages for 5 years.
Yep.
You know that price is going to end up being like $350 a month. And then when you think about households and people with time, they're going to think about, well, am I paying a gardener? Do I have a lawn care service? Am I paying for this? Am I paying for that? Do I have a pool service company? You know, all these things that add up. In addition to, if you do those things yourself, how much time in a week do you get back if Optimus can do your laundry for you, if it can clean your kitchen, if it can cut your grass, and if it can do the mundane chores that you just don't want to do, but you have to because you're an adult? I think people will gladly spend $350 a month to get 5 to 10 hours a week back in their lives, in addition to probably finding other use cases for it.
I 1000% agree. And the fact that that's just one part of the AI discussion to me is one of the most fascinating elements of this conversation around a bubble. What do you think would be a argument that the bears can say is correct? What has to happen in the next, call it 5 years, for you to be wrong about your thesis?
The big four need to take their foot off the gas, and they need to stop spending capital, and they need to stop building data centers.
So CapEx slows down, bears end up winning this argument, basically.
If you get CapEx cut by 20%, 30%, that will rock this whole thesis.
I agree.
But that's not what they're saying. None of these companies are saying that. You have more companies fighting. Look, I didn't put the numbers from XAI in there because I don't have the numbers. They're not a public company. Okay. We know that ChatGPT is buying a ton, and that's outside what Microsoft's doing. So I don't have those numbers. They're a private company. There are so many other aspects of this. I mean, sure, China invades Taiwan, but what are the chances of that happening at this point?
If that happens, forget the AI bubble, right? Like,
we have way bigger. If that happens, we have way bigger problems because you're on the verge of nuclear war at that point.
Yeah.
So this is the last thing we're going to be thinking about.
Is there a world where you think the chips don't actually deliver better generations of architecture, and that could be where this all collapses? Like NVIDIA can't keep producing a better chip?
Have we seen that happen yet?
We have not.
I mean, you go back to computer chips, x86 architecture, every iteration is better than the last version. You go with GPUs, every version's better than the last version. So it's not something we've seen yet. And I don't think it's going to happen because now NVIDIA is working with so much horsepower. Think about what they're going to be able to work with in 2 years from now with the new stuff that they implement. It's only going to speed up.
Yeah. No, I agree. I think the culmination of this discussion, for those that kind of just joined, and you can rewind and hear Steve's thesis and you can read his tweet that I'm putting right here, is if the big four companies, Microsoft, Amazon, Meta, and Google, continue to spend from their free cash flow, not the debt markets, to be able to build out what is necessary to make AI functioning in society, aka data centers, and they buy hundreds of thousands and eventually millions of GPUs to fill those data centers up with, the bull case for all the semiconductor names continues. The ROI starts to eventually show itself, which Jensen has claimed we've already started to see an ROI. And the new products, whether it's self-driving, robotics, drug discovery, personal assistance, that we can't even really fathom yet, because just like the internet, we didn't know what websites would become the biggest websites. That is a 5 to 10 year journey that transforms everything. And there will be pullbacks in the midst of that journey, but not being on that journey for the next 10 years. I mean, the worst case is you're on the journey and everyone's wrong and we all go broke. But like the other worst case is that you're not on it and it ends up being right. And maybe there's a better than 50% chance it's right. And everyone makes a lot more money than they thought they would because these companies end up performing. And I don't think you want to fade that rally. especially if it's a multi-year rally.
Look, there will be pullbacks, there'll be retracements, but ultimately, at this point, none of these companies are slowing down their spend, which is very bullish for NVIDIA and other companies.
Okay, let's talk some markets for the last 15 minutes. Government shutdown. Do you care?
Yeah, I mean, we don't want the government to shut down. We don't want people not getting paychecks. We don't want people out of work. Like, that's not what we want. Look, I'm independent. I try not to lean one way or another. I'm sick of all the fighting. Like, I'm really sick of it. Like, everybody needs to stop posturing and start figuring out what's best for the future of this country. Like, it's just, I don't know.
Yeah, Goldman Sachs basically came out with a report today. They said there's a better than 50% chance that we'll have a shutdown, but it's down from 75% last week. I'll put this in the chat, but basically the summary is, hey, most likely it'll be shut down for a week, max 2 weeks. And after that, we'll come up with some negotiation between Democrats and Republicans. Now, the sort of new thing about this is that Trump is threatening a mass firing of different government employees that I think he's already been waiting to kind of fire. And so this is kind of his bargaining chip to not get a shutdown, because he would just engage in more firing. And then, maybe the Democrats would get the blame for that, which wouldn't be good politically. But Goldman Sachs says it might happen for a week. You'll move on. I think the markets would be basically flat to down I think we'll know by Wednesday, Thursday if we're legit getting a shutdown. But I don't think Trump or anyone in the administration wants to have a shutdown that lasts any longer than a week. So I don't think it's going to be the biggest deal in the world. Hopefully.
Yeah, I mean, this is what I'll say about it. And I don't like talking politics. I don't like taking a side one way or another publicly. And we need to really get everybody on the same page. You can have your differences. You can disagree on certain things. But at some point, you have to do what's best for the public. Like, we need this country to come together and start making some good decisions. Because if we don't, and both sides just continuously bicker and fight, gonna miss so many things that we need to figure out answers to.
Agreed.
And we just, I don't know. To me, it's just, we need cooler heads at the moment across the board.
Well, in some unifying news, Bad Bunny will be the performer at the next Super Bowl.
I would not have bet on that.
I did not expect them to go for Bad Bunny.
I don't even know who Bad Bunny is.
Oh, wow. You get on me for not knowing you don't know who Bad Bunny is?
No.
See, guys, can we get some hate in the chat for Steve? I get every time, can we get a little bit of hate directed that way? Because
I mean,
bro, they're agreeing with you.
Yeah.
Who is he?
I don't really listen to music. Who is Bad Bunny?
He's a musician, dude. He's the #1 streamed artist on Spotify.
Oh, I don't have Spotify.
I think they're saying who is Bad Bunny to freaking go along with what you just said. I think that's why they're saying it. Goodness, bro. All right, well, Bad Bunny. There you go. That's what we got.
Bad Bunny. There you go.
This is a chart for October volatility for those that were curious. So October historically is the most volatile month of the year. Average October volatility is 33% above for the other 11 months. So September is supposed to be the worst month of the year. We got 2 days left, and we'll see how September ends. October is technically the most volatile month of the year. Now, October tends to be more green than September, so theoretically, we should hopefully.
And Halloween's on Friday the 13th for the first time in how many years?
I don't know. You're telling me for the
some
first time.
Crazy number.
No. The 13th's on Monday, bro. What are you talking about?
Isn't Halloween on Friday the 13th this year?
Halloween is always October 31st. What are you saying?
Isn't that a Friday this year?
Yeah, but that's not Friday the 13th.
I was trying to get you.
Fail.
I know.
Between that and Bad Bunny, you're just Stick to AI conversations, bro. Stick to AI. Can we get some L's in the chat, bro? Finally,
No,
we got a
I'm
nice.
trying to get you to agree to that.
We got a nice.
But I really
big-
don't know who Bad Bunny is.
We need Steve to finally take some L's, bro. I'm tired of taking it for the team, dude. Anyway, October is super volatile. And so that is one thing that we should be expecting. Now, one thing about September historically is if we end out where we are right now in the S&P, that will be a 3.5% month for September. The last time we had a month that good was 2010 in September, 8.7%. So in the next 2 days, if we don't give back 1%, which if we do, it'll be basically like 2024 when the S&P was up about 2.7%. If we keep it just at this level, no up, no down, it's going to be an amazing September. And maybe that sets up a foundation for a crappy October and then a pullback, or maybe that just keeps the momentum going in October.
Guess what?
What?
Guess what you get in October?
What?
Earnings.
Yeah, that's true. But that's why it's volatile. You know?
And think about this. Financials blew it out of the water in Q2.
I think they
You
continue.
got rates coming down.
Yeah.
They could
Yeah.
blow it out of the water again, set the tone.
Yeah. I mean, you've got earnings coming up. You've got a volatile month, which, by the way, if that volatility is to the downside, I mean, if Hood goes to 100, Palantir goes to 150, if Rocket Lab goes to 40, like there plenty of people are buying that dip. Plenty of people. I mean, I'm buying some of those dips. So it's like you've got money on the sidelines that's ready. Also, we get a rate cut in October, hopefully. There's a 90% chance. But if September stays the way it is, it's a pretty amazing September, up 3.5%. If not,
Oh, man, Amit, they're asking a question that should not be talked about.
I already told them that I'm not allowed to speak on it. So.
They're asking a question. Don't ask the question. You're not ready for the answer before.
Okay, let me just wrap a bow on this, and then we'll end up with that last thing. So again, to end out how we're thinking of or previewing October, one of the most volatile months for the year. September, if we end out the way we end out right now, that's up 3.5%, which is, again, pretty damn good for September. If we give back 1%, we pretty much end out the same September as 2024, up about 2.5%. October, we have earnings, as Steve mentioned, which I think earnings are going to be great. I don't see any massive slowdown in earnings, and financials are going to lead the way, so that could lead us to the upside. And if you do get an October dip, which, by the way, August 1st, you got the dip down 1.6%. September 1st, you had a dip down about 1.7%. Both of those dips recovered within about 4 to 5 days. August was actually like 2 days. September took about 4 days. If that happens again in October, maybe that dip's a little bit of a head fake and we actually go lower. But again, if you pick any level on any stock down 10% from current prices, you got a lot of people that are going to be excited. I mean, if Meta goes below 700 or something, like people are going to buy that dip. So I do think it's setting up for a strong October. And if Q3 can deliver along with the rate cut on the 17th, maybe October shouldn't be too bad in 2025. Yeah, maybe it's Uptober. Maybe. Also, this is a great point by Alexander. The Apex Summit is at the end of October with Trump and Xi. And maybe the wild card is not only a trade deal, we got the TikTok deal, so maybe that leads to a trade deal, but also maybe a deal with India as they've started to communicate more. I think that's being aggressive by the end of October, but towards the end of the year, if there's rumors of a China-India deal and South Korea that Lutnick talked about last week coming in place, that could also be very bullish for the broader markets.
It'd be very bullish. I like it.
Having said that, I already told everyone what they thought of, they asked me, what did you think of Heat? And I said, it was a movie and I watched it.
Good. That's a good answer.
That was my analysis of the movie. That's all I'm
So
going to say.
what's the next one you're going to watch?
I don't know, but I don't know if you should recommend it because your top 5 movies have not.
Oh, wow. You're giving it away. I would stop right there.
All I'm saying is your top 5 movies.
I wouldn't go any further.
Your top 5 would not be in my top 5. Let's just say
Post T. Nelly.
Let's just say that.
Let's just say, greatest cops and robbers movie of all time, bar none. I agree.
No, dude, honestly, the conclusion I've come to about like content in general? I would rather
30-second reel. You're not interested?
I actually don't watch a lot of reels. I watch very long podcast clips on YouTube. That gets my attention hooked. Movies don't do it for me. And I want to be more into movies, but I'm also not going to blame myself for not caring about movies because it's just not intellectually stimulating for me. It's just not.
I think the text that I sent you is correct. I think you growing up in an age of smartphones, it makes it very hard for you to watch something that's 2 to 3 hours long on just stuff that's not true. You know what I mean? Like
Yeah,
you can sit there and watch All In or Compound because you're into the market, but I think it's very hard for you to sit there and watch something for 2 to 3 hours that just is made up.
Having said that, I also do want to increase my cultural repertoire of knowledge. So I want to try to be able to speak with Dan Ives about Animal House.
I
But
think
it's
I know
really
why
hard.
you didn't like Billions. I don't think you understood the references that Wags and Bobby were talking about.
No, I think the reason I didn't like Billions is because they were talking for 40
Because it
minutes
was
out of 42
awesome.
minutes. No, there's too much talking. It's not enough.
Incredible.
I'm okay with character development, but goodness, were they developing those characters? I'm like, bro, like, can we see some? Can he like short a stock and see the portfolio go up, or can we like see something happen? Like they're just talking in a boardroom for freaking 30 minutes. Like that was the hard part about that show. But football, dude, I'm kind of like the now on my Instagram, these football highlights.
Dude, I don't
Lamar
know
Jackson
why you're
touchdowns.
listening to these people about these bets. No bueno.
What'd you say?
I don't know why you're listening to these people.
Oh, well, Farzad in general, Farzad messed up. But I knew he'd mess up. But now I get to give him shit about Penn State. But no, I actually I'm actually kind of starting to like football a little bit more, just like
Good.
in general. I don't know if I would sit and watch a full game, but like watching the highlights is like kind of cool. And so,
Did you watch any of the Ryder Cup?
no.
Rory snapped. He was so angry at the crowd.
Watching golf is a different type. Oh, wow. Packers up by 13. This is a big one, right? Packers Cowboys. It has to be a big one.
I have the Packers in my parlay for the night.
Yeah, no, I didn't watch Ryder Cup, but did the United States win the Ryder Cup? No, we lost. But who won?
Admit you should have watched it.
Who won?
Europe.
Oh, shit. Europe beat the United States
US
in
came
golf.
back, but they were not off to a great start.
Are Europeans like known for golf? I don't know anything about golf, but I feel like the United States.
I'm gonna pretend you didn't say that, but I mean you don't play golf, so I can't be mad.
Bro, the only golfers I know are Tiger Woods and yeah, Tiger
We're
Woods.
gonna get it. Look, it's a global sport. Let's just say that.
They invented golf. Okay, so
Yes.
I didn't know that.
Yes.
Anyway,
We gotta get you on some movies. I mean, I actually rewatched Rocky IV today. It was so good. Oh my god.
yeah, that's on the list. That is.
I'm interested in the chat. Like, can he watch Rocky IV without seeing 1, 2, and 3? He's not gonna sit through the first 3.
Am I saying it as golf? Dude, why does everyone think
Golf? Golf.
That's what I said. Golf.
You're saying golf.
Golf? You're saying
Golf.
golf?
Yes.
That's not how I naturally. I just say golf. I don't know. I don't know how else you guys say it.
Oh man, you're gonna make Clayton angry. I mean,
I'm not trolling, bro.
He couldn't do it. He couldn't get through Godfather.
Yeah, I couldn't get through Godfather. Maybe one day we'll try that.
He couldn't do it.
Are there any stocks you are looking at this week that you care about? Anything you're willing to buy on a dip? Anything you're writing calls on?
Yeah, I mean, Nvidia and BMNR and Ethereum, the same as last week. Like right now, I'm just not changing my stance at the moment.
Dude, BMNR is so volatile. It's up 5% right now because Ethereum.
They freaking bought so much ETH in the past week is amazing.
They bought like 210,000 ETH in the past week. Yeah,
it's incredible. Did you watch Margin Call?
Yeah, I didn't like it either.
You didn't like it, did you?
No. I like The Big Short, not Margin Call.
I mean, how can you not like The Big Short? Big Short's so good.
This
I'm
is the
actually
chart.
surprised you didn't like Industry.
To be fair, I didn't really try Industry. I tried for like
Oh,
30
well, that's
minutes.
not good.
Yeah, I've actually got to try that. This is the chart I shared last week again on Ethereum. 52% of the stablecoin market cap is on Ethereum. So it's 306 billion stablecoin market cap, total kind of addressable market that's available. And then 159 billion is Ethereum. Again, I think this number keeps going up over the next decade. And if it does, then Ethereum's probably more valuable. And BM&R will go up and down, but long-term should go up if it's more valuable. Oracle, Oracle, I'm not touching Oracle because they've made such a big move. I mean, I know it's down from 350 to 285.
You and I are the worst investors in the world.
Well, I'm not the one who wrote the article on Oracle. You're the one who wrote the article at 120. What goes through your mind when you have a investing thesis, but then you don't buy? Like, are you just...
I can't buy everything.
No, but you could, if you were that bullish on Oracle, you could put $2,000 in it. You have to put $100,000. I feel like you and I suffer through the same thing, which is if you're not going to make a stock a real position, like a position where you actually care about, then it's not worth buying, right? And so maybe for you, like throwing a couple grand into Oracle, even though at 120 you thought it was cheap, wasn't worth it unless you were going to, really bet the farm on Oracle. But it's hard to bet the farm on a lot of stocks.
I'm looking at IBM, and that's another one that I was so bullish on for so long, and I never pulled the trigger.
Well, to be fair, it was dead money for a long time, so I understand why you didn't pull the trigger.
No, but I've been saying it since, 2022. And what's crazy is after it got to close to 300, and then it fell down to 242, I said the fall was unwarranted. And now it's back to 284.
Yeah.
I don't know. I just need to give you an account to play with.
Yeah, can't buy everything, but again, there were gems in April, absolutely gems. And that's another reason, going back to this theme of why the bears are so upset. I think a lot of them missed April. A lot of them really missed April.
I got another theory. And I put it in the article. A lot of these finance professionals are looking at everybody on X posting their gains of triple digits and some people quadruple digits. And then they're driving the dagger in further and twisting it by showing that it's from freaking options or freaking call spreads.
Yeah.
And they're like, wait, we're in the business. We're generating 15 or 20%, and these people that don't know what they're doing are significantly outperforming. Like, what is going on? I think it's more evident about everybody having these gains in retail, and they just feel like we have to have another 2021 because you can legitimately just throw a dart and not miss at this point, is what it feels like. But I think that it's unfair to think like that because a lot of people do a lot of freaking research. Like, there's so much access to information right now. And you have people that are aggregating it that people can just watch a YouTube video and get a solid investment thesis.
Well, dude, like this entire community, right? For the past 2-3 years, we've all come together twice a day to share ideas. And when people post they're up 800% on SoFi calls, and some hedge fund guys like, well, It's a bubble because that person's up 800%. It's like, no, at $7, Tanner was making a lot of content about SoFi, and there were people watching that ended up believing in his.
And think about it. And what are the clients saying? I'm paying you 2 and 20 for what?
For not to be up 800% to the guy who listened to Tanner, Like it has to hurt a money manager's ego to know someone listened to Amit about Palantir or Tanner about SoFi, or they read Steve's article about Oracle in April, and they're up, like they're destroying the market, and that fund manager can barely beat the market for their clients that they're just paying millions of dollars in fees in. Like it has to hurt their ego. And as a result, I think, we were talking about this earlier today, but there are some people at the heads of the very, very large financial institutions, JP Morgan, Morgan Stanley, et cetera, that were fired in 2024 because they were so bearish from 22 to the end of 24 that the clients that listened to their advice stayed on the sidelines and saw Meta go from 80 to 800 and saw Palantir go from 6 to 80, and saw all these other names do well. They got fired. And now when you read their content online, because I follow these people on Twitter, I listen to their podcasts, they are unbelievably bearish on the state of the markets. And you try to kind of peel back the onion and say, why are they so upset? Like, why are they so snarky in their tweets? Why are they so aggressive when they respond to people? Why are they so arrogant, for lack of a better word? And it's because they were fired from a really fancy corporate job as the head equity strategist because of being so wrong for the past 2 years that they want to feel vindicated by having everything collapse. And if everything doesn't collapse, obviously, they're not going to be able to be vindicated, but they would desperately want that to happen to say that, see, I wasn't the guy who was wrong. I was just too early. And that's a scary place to be in because you can be wrong for a very long time. And maybe this whole thing does pop, but maybe it's in 2035.
Oh, and if you're wrong for a very long time, then it pops and it goes down 30%, but then 6 months you're back up. Were you even right?
It's a good question.
I mean, I don't consider that being right.
I do not consider that being right at all.
I want to show you something because I just got to find the right charts. Give me a sec. Oh, here we go. This is just another reason of why we're nowhere close to a bubble. But we're close. Does it look like we're anywhere near all-time high valuations on the S&P?
No, not on that chart. Now, we are above the average.
In November 2020, heading into 2021, you were at almost 37 times. I mean, the dot-com bubble, you're at 122 times earnings on the PE. We're nowhere near that. It's just, I don't know.
Yeah, and the average is 18 times. We're at 22. So we're above the average, but we're not at peak euphoria in 2020 or in 1999 when it was at 60 in 99 or 2020 when it was at 37, as you were showing. When we get there, we can have that conversation, but it's going to be more obvious, bro. Like if NVIDIA was at freaking 6 trillion right now, I think most of us would not be able to make sense of the numbers to such an extent. And at 4 trillion, I know people still think that's crazy, but when you look at the estimates, 26 times earnings in 2 years for 2027, that's reasonable. Meta at 1.9 trillion is reasonable. Google, for goodness sakes, was at freaking 17 times earnings for the majority of this year. Now it's at 24 times. That's reasonable. So it's not about, this is not how it happened in the past, or this is just a different historical trajectory. It's just look at the freaking numbers. We're not pontificating about subjective views here.
Here's another reason why the bears are wrong. That's since 1928. So you're telling me 100 years worth of data is wrong? So every time you got a retracement, the bears were right. Did it ever last?
No.
I mean, really put that in perspective. If you were, think about this. If in 1990, okay, it was at 329. If you were bearish about all the money being spent, and then you get up to 1500, and then the bubble pops, and the people that were bearish for the past decade start to look smart. So it went to 848. But where was it in 1990? Ah, shit. Hold on. Oh, 356. So when the bears were smart, when the bubble popped, the market was still 1.5x from where it was. And that didn't last. I mean, I don't know that's why time in the market is so important.
Yeah, and look, the other thing here is that people want to avoid the 2022 type of years where 20% down on the S&P, everything gets screwed. I think there's two perspectives on that. Number one, it's yes, no one wants to be stuck in that, but if you're in the markets, as Steve said, time in the markets is so much more important than time in the market. So it's the inevitable thing. You're just like April, right? You just have to deal with it if you're going to be a market participant. Number two is I mean, if you're at least, I don't know, under the age of 60, you got to be salivating for some of those opportunities, right? Like if we do have a 20% drawdown on the S&P and nothing fundamentally changes on these earnings, it's not AI driven, it's not bubble, it's just maybe recession, labor market, whatever, and we get to buy Hood again at 30, which I know would suck. It would hurt my portfolio a lot. But if I'm thinking long term, like that would be one of the best opportunities ever. And we got an opportunity like that in April, which is why, again, I think all these hedge fund managers and money equity analysts are so upset, because they didn't take advantage of it. They thought that was going to be another 2022 scenario. And it just went the opposite. And so the other final thing about this is you cannot fight, as you said, Steve, technology. You just can't. So if technology is going this, like every taxi driver that fought the advent of Uber versus recognizing, hey, this is probably way better than being stuck in the New York taxi service, maybe I need to pivot. Things change. If you fought the internet, you probably didn't build a successful business.
Yeah, I mean, the big problem was that the taxi drivers spent so much money on the medallions. That was their golden parachute, and it ended up becoming irrelevant.
Yes.
That was the fight. That wasn't over anything but the golden parachute being eradicated.
I think the easiest way to buy dips in this market and like invest without freaking out is actually doing your own investigative due diligence on the nature of AI. And like maybe listening to me and Steve and reading Steve's article is part of that due diligence. But like when you have full on conviction that this is real, it's happening, you can easily buy a 30% dip on NVIDIA. You can easily start to initiate positions without wondering, is our data centers fake? You know, the people that made bank on Iran and Cypher and Wolf are because they understood, all right, data centers are real. These companies are pivoting. We're going to ride the trend of data centers. And now those stocks have outperformed pretty much every single stock in the market, at least Iran. So without that conviction, it's tough. It's hard to be committed to this market, but with that conviction, it matters. And by the way, bringing up a clip from Morgan Stanley. This was back in May. Numbers are a little bit off now, but
hold on 1 second. It also makes it easier when you're investing in the S&P and you have a good portion of your capital in just a low-cost index fund.
Yeah.
Because you're already so diversified that buying a couple of individual companies, God forbid there's unexpected volatility, you're not getting too killed.
Yeah. Like, I mean, S&P can have really bad years, but, you know, down 20, 30% is usually where enough pain gets in. So you can handle that. Now, if you're not ready to be down 70, 80% on individual stocks, then probably you don't want to be that allocated to them, but just buying.
What happens when a couple of billion comes out of money markets? That doesn't even include CDs or bonds.
So this is what Mike Wilson was saying. This was back in May, but this kind of rings true to what's going on, at least in September, with more money coming into the markets every day.
Our work suggests that right now, retail is buying $5 billion a day, steady state. Okay. Systematic strategies, CTAs, are buying about $5 to $6 billion a day for the next 30 days, because unless the market really falls out of bed, they're trend following. And corporates are buying about $5 billion a day. So you have $15 billion a day of demand in like S&P type products, you know, NASDAQ 100, whatever, the big stuff. I mean, you know, it's hard to imagine that you're going to get much. Like today's a good example. I mean, like, okay, so Treasury debt downgraded last week.
Yep.
Okay? Then JGBs go wild. They pass a tax deal that's not really, you know, friendly for the bond market. And what do we sell? 1%?
Yeah. Yeah.
It rallied.
Yeah. The market was down in the morning and now it's up 45 basis
That's
points.
that $15 billion of demand. Our work suggests that
if we were to get some really bad dips, that 15 billion of demand probably continues to come in. So,
yeah, I'm not too worried about it.
Yeah, I just think it's really hard to say it's a bubble.
Yeah, it's very hard to say it's a bubble.
Steve, what do you consider low cost for an ETF or index fund?
SPY, VOO. I mean, I like VOO better, but you know, 0.02, 0.03. I mean, you're paying basically $3 every $10,000.
And you're talking about the expense ratio.
Yep.
Yeah. That's fair.
I mean, it's so low and it just gets you broad exposure. I mean, I love S&P index funds. Love.
Define long term. I would say your entire life, right? Until you retire.
Decades.
Decades.
I mean, look, if you're going to buy an individual stock, my opinion, unless you're going in with the idea that this is a short-term play or a momentum side trade, I go into every position thinking I'm going to hold it for 5 to 10 years minimum, if not longer.
Which is why Steve tends to say, I don't care when I ask him if a
It's
stock.
very easy for me to say I don't care.
Yeah.
Because I'm not buying things with the idea that if it goes down 30%, I got it at the wrong time, that I'm going to freak out and sell. Like, I'm buying knowing that I don't know the future. And if it goes down, I can do either dollar cost average or just let it ride out because I am truly looking very far in advance.
It's also a very toxic mentality when you buy a stock that you believe in for all the thesis that you have on it. It goes down 30%, and then you consider yourself the worst investor on the planet. It's like, first of all, you have to recognize all the big guys, Ackman, Buffett, they've done this 10 times worse than you in terms of timing being bad on a stock. Number two is, like, if you're a market participant, you have to be able to understand averaging down into a stock, because no one, if you're able to find the bottom in every stock, you would be a multi-trillionaire, right? Like, you're just not able to do that. So DCAing is not a crime. It's something that's very normal and healthy. And it allows you to say, I don't care if Robinhood goes down to $80 from 120. Like, yeah, my portfolio will suffer, but I probably want to buy that dip, and I don't care.
Look, I've made some really big mistakes. I should have a lot more money than I do. That's part of investing. Everybody makes mistakes.
Yeah. Now, again, if you're going calls expiring next month, you think the stock's going to move 20%, your call is going to move 2,000%. Like,
that's gambling.
That's
not
gambling.
investing. That's gambling.
That's gambling.
Look, I've sold AMD at the worst possible time. I sold it at $3.68 because this is back 2015, 2016, and put some money into it. It went down a dollar cost average. It was down at like $2. I'm like, I just want my money back. And every time it went up, it would go back down. And then I sold it when it went up, and it just never stopped going, and it just kept going. In retrospect, I couldn't have known, like, none of this was happening. But at the same time, those are lessons you learn. And having stuff like that under your belt makes it really easy to say, I don't care when stuff goes down 5%.
Would you say that was your biggest mistake with the stock?
No, not buying Bitcoin when it was at $8. I mean, I've told you that story. Like, I don't know if I've said publicly, but when I was at Bed Bath, a bunch of the IT guys and I were talking about mining it, and just never panned out. And there was no Coinbase. There was none of that stuff. Mt. Gox freaking was happening. It was the weirdest way to buy Bitcoin and then store it. So I just didn't get into it. And then I had another opportunity with Ethereum when Ethereum was at like 12 that I was going to mine that. I spec'd out a computer, and then I just never did it. I mean,
dude, could you imagine if you became a crypto bro that early?
Like, dude, I was this close. Like, I was at dinner one night with a bunch of people in my building talking about it. And they all say to me this day, if we had just fucking listened to you, we would all have like $100 million.
Dude, because right now you think Bitcoin's worthless. Imagine if you had bought it at $8.
Right. So I got crazy.
Now I know why you hate Bitcoin so much. Now, dude, I've been waiting for this moment of like, why does he hate Bitcoin?
Crazy story. So you know how I used to play video games a lot. Somebody who I used to play video games with bought a bunch of Bitcoin. They ended up selling like half of it at like 15,000, and they retired at like 35.
Oh yeah, of course. Why not?
Just freaking crazy.
Dude, now I get it. You told me the story a long time ago, but I forgot. So it's all rooted in opportunity cost.
I don't know if you can say that, because I had the opportunity with Ethereum, and I'm buying it now, and I could have bought it at 12.
That's fair. But I don't blame you, dude. Like, obviously everyone has emotions when they could have been in something, and then, Like when you're that close to being it. I had a friend in 2017 as well that was telling me about Bitcoin. I had no idea what he was talking about. He was speaking a different language to me, but he was just telling me about it.
Yeah, but look, 2017
It's different.
is much different than 2011
Yeah.
when I was looking at it.
Yeah. Someone says, would you do half index funds, half stocks? I don't think it has to be 50-50. I think it has to be what you're comfortable with.
Yeah, that's not something that we can answer.
Yeah.
You know, you have to make a plan for yourself. I can tell you that 100% of my 401 and my wife's 401 are in index funds. And then what I do, and then I have index funds outside of the 401. Like I'm a big believer in them. That's all I can say. It's not right for everybody. Some people rather 60-40. At my age and where I think things are going, I'm not switching for quite some time to a different strategy in my retirement accounts.
Yeah. Yeah. I think the most important thing is, regardless of the percentage, it's like, what is the strategy? And just being clearly defined. Because like once, like as you can see, you can tell from the confidence in Steve's voice, like his 401k is what it is, and he has zero regrets or this. So it's like, no, this is what it is. This is how I'm going to retire. And you just keep adding to it.
Oh, it's funny because I was in a target date fund because most people do a target date fund.
Yeah. Yeah.
And I started really looking at it, and this was before pandemic. This was probably 2018. And I'm like, why am I in a target date fund? And I just moved along to the S&P. So I started running the numbers, and I'm like, it makes more sense for me to be in the S&P.
You did it at the right time, right before AI.
Yeah, I mean, look, target date funds are good for people who just don't want to manage anything because it gives you the sliding scale as you get older, you have more bonds. But I'll argue that in 2022, that blew up the whole 60-40 idea because the value of bonds go down when interest rates go up. I don't think people realize that. Like to me, you only do that when you're at a point where you just need the income.
Yeah.
But that's me. Like I have an idea of what I need to do.
I agree. Okay, last topic for you real quick, Steve. What do you think about this story? So let me pull this up. There's a woman in California who started a business, and she charges $30,000. What do you think I'm going to say?
I have no idea what you're going to say.
To name your baby.
I've heard about this.
So she's a San Francisco baby name consultant.
Okay.
And the San Francisco, I guess, rich people.
This is what I'm saying. If you have 30 grand to pay somebody to name your baby, I don't think you're doing that bad in life. So it's probably an expense that, and look, people may pay this just so you don't get in a fight with your significant other.
Dude, okay, I would not pay 30 grand to avoid a fight. Like, how bad does the fight? 30 grand to avoid a freaking fight, bro? Goodness, great. No, but as soon as I saw this article, I was like,
insane.
My brain went to, okay, not everyone is going to build a business like her. But what if more people use AI to build these like, look, I don't know what magic she uses to charge 30,000, but I mean, if I wanted to replicate a baby naming business, I would just give a prompt to ChatGPT, give everything my clients tell me they want in a name and be like, give me 50 good names and I'll send it back to them. And like, I don't think it's the most complicated thing in the world to do. And I wonder if more and more people will start independent, like little small businesses using AI to offer these types of services. And the reason I'm bringing this up is because we talk so much about AI commoditizing jobs. What if these are, and Jensen talked about it in the interview, what if these are the different types? And I know we can't really understand baby names as like a broad-based industry, but what if these are the types of industries that are being formed?
Sure. I mean, how many of these industries do you actually need? I don't know. We're going to find out.
Well, how many websites did you actually need in 2000? Like we have billions of websites now. AOL is still the 45th ranked top website on the planet.
Yeah. Do you want to know why? Let me ask you this. Can you answer me why without moving your hands and putting it on the keyboard?
It's because AOL's an email provider.
Yes.
Yeah. Dude, I have an AOL.
That's the only reason, because you have so many people that have not changed their AOL email address to a freaking Yahoo or Gmail account or Outlook. People still use Hotmail and AOL.
Huh? Hey, you've got mail. I remember this. But the thing is, it's like I like if AI could create more opportunities for people to just do, because that's a creative job, bro. Baby naming, like maybe it unlocks more creativity for people. Now, not everyone.
When are we going to have AI chatbots trading for us?
I think that's already happening in the quant funds. I think eventually retail. So I think the inevitable way that happens is Robinhood will create a AI trading API. And that is what people will be able to hook into and customize their own algorithm. And then it's going to go crazy.
I mean, in all seriousness, do you think it gets to the point, and let's just say 3 or 4 years from now, where you could just throw 10 grand in an account and have an AI bot trade for you and end up having a couple of million within 5 years?
No. Okay. So I was agreeing with you up till you said the return. The problem is, and I don't know what the answer to this is going to be, if everyone's doing that, there's no alpha.
No,
like if we all can,
that's the whole point. If everybody's doing it,
there's no alpha.
Shouldn't it theoretically intensify everything that the money's going into?
If you and I pay $10 a month to access a trading API and we put our trading APIs against each other and they're both intelligent, someone like in a market, someone has to be
right. There's
smart,
a winner and
the
a
other
loser.
person has to be wrong, right?
Yes.
Like if I'm like when I bought the Robinhood options when it was 8 and someone sold it to me, that person really messed up because they should have been buying those options, or that market maker, because I made a lot from buying it when they sold it. If there's two trading APIs that recognize Robinhood at 8 is a phenomenal deal, who's going to sell you the option? Because both of them are going to want to buy it. So who's going to be the person? What do you say?
Who said it has to be an option? Why can't it be scalping on Microsoft?
I'm just saying the logical extremity to your point is that the bots become so good, the alpha disappears. If everyone on the planet's using, or most sophisticated traders are using a bot, if everyone knows Microsoft's should be trading at 505 and someone doesn't believe it should be trading at 490, because like if you buy a put on Microsoft at 490, someone's selling you that put off the belief that they don't think Microsoft should be 490. But if both bots believe Microsoft is accurately valued at 505, how do you scalp? How do you trade? How do you buy and sell if all the bots are doing the same shit? It's hard to answer that, right? I've thought about this question deeply.
I think I'm thinking about it a little bit differently than you. I think I'm thinking about it as them doing the technical analysis and then moving in and out of positions on a daily basis and making like 40, 50 trades and just scalping, not long-term investing.
But that doesn't matter, because if everyone,
if you have hundreds of millions of shares traded a day, stock doesn't just go flatline. Right. Even if
that's my point. If all the bots know what to do and they're doing the same shit, how can we
not
imagine
be doing the same thing on the same companies? I'm just saying that there's got to be a way for you to have a trading program that actually works.
I think there's going to be a lot of trading programs, but if they all get super GPT-7 level intelligence and they all know I shouldn't buy 1,000 shares of Microsoft to scalp it for 0.01% because the other person's doing the same, like the human level of emotion that is present in the markets is what actually makes a market. Like in April, the big guys sold, the little guys bought. That's what made the market. I don't know what the market looks like in 15 years if it's all automatic and architected, because someone needs to think Duolingo is dead because of AI. The other person needs to think that person's an idiot and Duolingo is going back to 500. But if everyone's like, well, I'll take myself out of it, I'll take Steve out of it, I'll take Tanner out of it, I'll just let the bot do all the research and the work, and they come to the same conclusion, then where is the discrepancy between the alpha that creates a market? I don't know. I don't know how that easily happens.
We're going to find out, aren't we? I can't believe that this many people read that freaking post I put out.
Your bubble post?
It's at 278,000 views.
Oh, wow. Not bad.
I can't believe that. That's crazy.
Not bad at all.
Pretty wild.
It's pretty wild. If you haven't read that post, I'm going to link it right here from Steve. You can check that out. Anything else? Is that pretty much it, Steve?
I gotta go figure something out with what I'm going to watch tonight.
Dude, aren't you about to go to sleep? It's almost 10 p.m.
I don't go to sleep until 12.
I'm going to bed, bro. I'm going to sleep.
So ridiculous.
I am going to bed. Why does Chris think AI is a bubble? I don't think Chris thinks it's a bubble. I think Chris is a little bit more skeptical about some of the data center build-out.
Let's see what Mr. Chris comes out with tomorrow.
Yeah, I don't look. I don't think.
Let's just say that Mr. Chris is doing some research right now.
Oh, Chris, did Chris text you about your post?
Let's just say that he's doing some research.
You got him freaking researching because of your post?
I mean, let's just say that may have been one of the phone calls I got.
Oh, I should have figured. When you said you got a phone call, I should have figured. Look, Chris, everyone knows Chris' story. His dad blew up in the dot-com bubble. He's really nervous that could happen again. And so he's a bit more conservative on it, which he should be. But I think he is a believer that AI is very real. I just don't know if he believes in it to the extent of some of the other people that are out there. So
We'll see.
there you go. All right, folks, that is pretty much it. Real quick before we end off, I just want to give a quick shout out. I've been meaning to do this because I got their book a couple weeks ago. This is a book by someone who was at the Miami meetup, Snyder. It's called The Gift of Nightmares. I've not fully read the book yet, but I met this person in Miami. They were at the meetup. They were also at the Las Vegas Robinhood event. It's a really, really inspiring story for anyone who wants to go check it out and get the book. Essentially, he was an orphan. He came from Haiti and he ended up in Philadelphia, and he kind of just figured out how to make it on his own. And the stock market, quite frankly, was one of the ways that he ended up finding a lot more financial freedom. And he was up a lot on the Robinhood calls that he showed me when he was at the Hood Summit. So The Gift of Nightmares is the name of this. Again, he didn't pay me for this or anything. It's not an advertisement. I just, whatever platform I have that I can use to kind of help out people in the community, I would definitely recommend checking it out. It is the American dream. And it is a story of an orphan who ended up finding the markets, finding his own way, and now is pretty successful. So you guys can check it out right there. I believe it's on Amazon, The Gift of Nightmares. If you type it in, it should be there. And for anyone who wants to read it, you can check it out. Snyder, if you're in the chat, appreciate you being here, man. Appreciate you being part of the journey. And it was great meeting you in Vegas and Miami. And yeah, I hope the book does very, very, very well. The Gift of Nightmares is the name of the book.
I'm going to read it.
All right, you should. Oh, Steve, we it's official. All right, here we go. Did you just make it?
Well, I guess do it on your browser first. See if it's live.
Yeah, it's live. All right, folks, here we go. Are you ready? I didn't know if Steve had done it yet, but he did. Ladies and gentlemen, introducing the Steven Fiorillo YouTube channel. I am going to be the first subscriber.
Oh, look at that. Miz, the first subscriber.
Look at that. All right, so what's the pitch? Why should people subscribe to your YouTube?
I have no idea.
You know, ironically, that's going to be enough to get people to subscribe.
I really don't know.
That's the cheat code that you get.
I'm going to try to do it one or two times a week. It's probably going to be like, it may even be up to 3, no more than 3. It'll probably be like a Saturday night thing, one day during the week, and then maybe like I don't know. We'll
okay,
see.
so let me say what my wow, 142 people love you, dude. Goodness gracious. Why do you love this guy so much?
Thank you, everyone. That's awesome.
Let me just say, this was my idea for Steve. He writes 3 articles a week. I think if he takes those 3 articles and just for 20 minutes talks in front of his webcam on StreamYard about whatever stock he writes about, it doesn't have to be NVIDIA or Palantir. It could be like anything. I think his analysis on any stock, given he's been doing it for 10, 15 years, is really special. I think that's your videos every week. 3 videos a week for 3 articles. And then 1 live stream.
Yeah, well, I mean, everything's going to be live.
Oh, so you're gonna do the okay, that makes sense.
Yeah, I'm not pre-recording and sending it to an editor. I'm not doing anything. It's all live.
All right. Well, if you're gonna do it live every time, I love live. Ray, I'm gonna pin your comment right there. So for those that want to get the channel, it's pinned. I love live because you get to engage with a community, and so I really enjoy it. Obviously, it takes a little bit of getting used to. You can't see one comment call you a idiot and then go on a tangent. Like it's hard. It's something you got to protect your mental sometimes. But still,
I mean, I am going to be talking about stocks. Pokemon
wow, 296, bro. Dude, you need 1,000 subs to be monetized. You're 30% of the way there in 5 minutes.
Maybe I'll put a tweet out about it too.
You need 1,000 subs and 4,000 watch hours, I think is the.
So I actually just started taking a position in this baseball player called Ben Rice is his name on the Yankees. And I think this kid is going to be a superstar. I normally don't prospect a lot, but I think he hit 26. He had 2 home runs today. He hit a grand slam the other night. The kid's heating up. I think if he doesn't get traded and he sticks with Judge and Bellinger under their guidance, I think this kid's going to be a future all-star, and he's going to be incredible. I mean, he's 26, lefty, pure swing. I mean,
so
I'm really bullish on him.
When you go live and you talk about this stuff, I mean, this is going to be part of your content, right? Discussing these sports positions as well.
Oh, yeah. Freaking sports cards, Pokemon cards, stock market.
413. Bro, what, like,
I don't know.
People freaking love you. Well, that's what I'm saying. Look, if you have an appeal with an audience in general, and you're on my show, Tanner's show all the time, you might as well start your own thing. Why? That doesn't mean you have to stop going on our stuff, but it does mean you have your own dedicated play. I'm a big believer, and everyone should build their own thing while they're collaborating with other people, because you want a home base for people to come to. And I think that could be your YouTube channel. Snyder, thank you for the $50 super chat. So there he is, Dr. Desir. Again, the gift of nightmares. You did not have to send the super chat, man. Really, really appreciate it. And thank you for the super chat.
Well, I just want everybody to freaking prosper. That's it.
Yeah, and part of having a community is like uplifting other people. So when he showed me the book and some people are probably in the chat that were there because he was telling a story out loud to about 30 people. It was early in the Miami meetup, and he was telling us, where he came from, how he got here. Like, if you're not going to use your platform to lift up other people, like, what's the point of even having a platform? So I think there's so many more stories in this entire community, and hopefully we can shed a light on it. But it's not easy. It's not easy to be in the stock market. It's not easy to build your own brand. It's not easy to put your opinions out there. It's not easy to write a freaking book about your life story. But if you're able to do that, I think it's just such a special journey, especially when it's with a real community. And so I'm happy. I'm happy you're starting a YouTube channel. I'm happy Snyder wrote a book. I think part of life is a creative journey. And I know not everyone's creative, but any level of creativity, people would say like live streaming on YouTube is not creative, but it's my form of creativity. And any form of creativity that you can get out into the world, I think is very, very special. 484. This guy's about to be at 500.
I picked something up for you that I got to give to you next time you come into the city.
Okay.
I was going to show it to you, but I think it's better if it's a surprise.
Our boy from Toronto messaged me the other day. He's going to be in New York soon.
Oh, yeah?
Not Tanner, the other guy.
I know who you're talking about.
You know what I'm talking about.
I know exactly who you're talking about.
Yeah, he has some ideas for us that he wants to talk about.
Well, you know what? Maybe he can get you to watch freaking Rocky or something.
All right, folks.
Freaking good. Oh, my God. You know what? I am definitely going to do movie reviews also.
Yes, that's I forgot. Yes,
definitely doing some movie.
That way you don't have to freaking just clown on me every Friday about movies. You can have a community that actually cares about your analysis. On why you think Heat, for whatever reason, is a top 5 movie of all time. That's.
I mean, we can go down a really big rabbit hole about Seagal's top 5 movies. Really big rabbit hole.
Who's Seagal?
Steven Seagal.
Oh.
Oh, but you're still going to type to see who he is. He's actually a controversial figure in the martial arts world.
What is his main movie?
I
Siege?
mean,
Under Siege?
Under Siege is probably considered his best movie, even though it's not, but it is a good movie.
Is it better than Heat?
No.
That's what I'm going to ask you every time. Is this better than Heat? Because
You may like Under Siege more than Heat.
I think I might like a lot of movies more than Heat. To be
You
honest.
probably will. I mean, you probably will.
Are we at 500? Are we at 500? Dude.
That's awesome.
That's crazy. That's awesome.
Oh, T. Nelly, I love it. Good job. Above the law. So good. Nico Toscani.
You know, I'm also happy people are subscribing because you've been on my channel for how many years now? At least like a year and a half, probably closer to, but like consistently a year and a half. And you've just given us so much analysis on the channel.
It all started with Finance Junkies when I bought all you guys a share of Cisco.
Yes, I remember that. You were one of the first guests on Finance Junkies. People loved you, and then you started hopping on my stream, and now it's like a couple times a week. You know, you're like my Tom Lee, my Dan Ives. You're, you know, when you want to talk to someone, get their
Dude,
analysis.
we're gonna have to live stream getting steaks somehow.
You know, Ben and Jax, they should let us do a live stream there.
Like we're gonna have to. I'm gonna have to figure that out so we can show how you eat a steak versus me.
Yeah, I agree, Cheryl. I think when you do an article, 20 minutes of a live stream. Well, I was saying pre-recorded because you know lives tend to be like an hour long. But even if it's 20 minutes live, 30 minutes live, just talking about the stock and then answering questions, I think that would be perfect. Because a lot of times people don't want to read the article, right? So now they can just listen to you talk about it, and it's easier to consume for a lot of people.
Yeah, we'll figure it out. I'm gonna think about it during the week. The first one will be on Saturday night. We'll go from there. Start in the beginning of October. Start Saturday night.
All right. I love it. I love it. Thank you, everybody, for subscribing to Steve. Super cool.
Thank you.
And
Appreciate it.
yeah, he deserves it. How did you first meet Steve? It was on a Twitter Spaces about Palantir. Twitter Spaces about Palantir.
Good old pounds here.
All right. That's it.
Amit's got to go to sleep.
I got to go to sleep. I'm excited to sleep early on a Sunday night. Wake up early on a Monday. You know, this is the thrill of being an adult. Dude, I'm turning 28 this month.
Oh my God, you're so old.
I'm not even, I mean, look, I know you're saying that as a joke, but you know my opinion on this. I do think.
Yeah, because you think that you're old. It's crazy.
And I think I'm right about that. I think
You're not.
late 20s is, you know, getting up there. So
You're not getting up there.
I'm quite literally getting up there. Like literally getting up there.
If you fall down, you're not getting injured. Like you're not old.
No, I'm not saying I'm old. I'm just saying like I'm getting older. That's all.
You're not old.
2 years away from 30.
Yeah, dude, you're not even in your prime. Your prime years are probably 29 to 34.
I agree. That's what I've heard. Yeah. I've heard.
I probably felt my best. I mean, it's hard to say. Because I think your best can mean different things, but like, obviously, you know, when you're 18 to 22, your testosterone's going crazy. But
it's hard to be prime 18, 22 because you're broke. Most people are broke at that age.
No, but that's not what I mean about prime. But also at that age,
you mean physical prime?
You're not doing all the things you should be doing to be optimal. But I think from 29 to 34, 35, I think you're in your prime years of just feeling good. You get all the stuff out of the system with going out at night with college and all that stuff.
No, but I also agree that 29 to 35-ish is like, most people at that point, they have a job, they're kind of settled in their career, they're getting like, you know, that also is prime to an extent because you know, at 18, you're broke, right? You're like, you can't easily go do stuff. Whereas, you know, you get a little bit more stability in your 30s, it gets easier, right? So that's what I think by prime as well. But yeah,
hopefully the next 5 to 10 years, we're going to have all these peptides personalized where we can just give a blood sample and get shot up with it. Like, I'm looking forward to that. I can tell you that.
Jensen was talking about that in the interview. I mean, he was saying,
I can't wait. Like, take my blood, give me my own personal peptide, and give me that needle. Like, let's go.
See, out of context, that would sound wild, but
no, I'm serious. Like, I cannot tell you how many times I have wanted stem cells for so long in my. It's just. I think what we're going to see with biotech is going to be insane. To me, that's one of the things I believe is going to be the most exciting about this whole AI race is where we go with biotech. And if I knew enough about the industry or I really had the time to go deep, I would really be looking at that because I think it's going to be one of the biggest things. Longevity is going to be huge.
Well, everyone wants to live longer. So there's a freaking massive market, right?
Like, I'm sorry, but think about it. Stallone doesn't look like what he looks like and hasn't looked what he's looked like without doing anything. Like, obviously, I don't know him. I don't know what he's doing, but you can't think that he's not at least on TRT and some other stuff to optimize his body. I mean, the guy's, what, 75?
Yeah. Yeah. Well, my thing is going into year 28 for me is like, I am just very blessed to be doing something that I want to do. You know, it's like you work really hard. I was talking about with my mom about this today, but it's like you work really hard over the past couple of years to get to a point where you kind of enjoy what you're doing. And I really, you know, this is something I really enjoy doing. And we've got a community here that really cares and has all different types of personalities and ideas. And you, me, Tanner, Roy, Chris, all of us just being able to kind of crowdsource our analysis and debate with each other. And hopefully that results in different takeaways for different people and that can actually impact their financial future. Like that to me is just very, very exciting. And from a media perspective, it's not corporate media. You know, I cannot imagine working at Yahoo or CNBC. I'm like, that's cool, but it's so inorganic toward like the culture of being online and doing it your own way. And like, you know, the number one thing I think that keeps people, I guess, young, quote unquote, is having a community. Right? Like a sense of belonging in a place.
I think the biggest thing is keeping your mind occupied.
Keeping your mind occupied, number one. But then like depression and loneliness is a real thing, right? So just even having a stream, even being in the chat, even, you know, being able to connect with people on Twitter, like that stuff is very, very special to a lot of people, especially in our niche, because none of our friends or family give a shit about what we do.
Oh, I can't even begin to tell you. Like, I shouldn't say it, but I'm going to say it. Like, I have friends that work in the industry that don't want to talk about stocks.
Yeah. Yeah.
Like, none of my friends want to talk about stocks. They don't care. They would rather spend their time doing other things. It's wild.
Yeah. And I think, look, if you are an embodiment of the people you hang around, if you hang around people that just never talk about this stuff, you know, and this is the stuff you care about, then it's hard to find that community. And I think that's why it's special. Are we at 600? Are we at 600? Steve, we are at 6.
So 6. Look at that.
Look, it is not easy to get people to subscribe. I just want you to know. Getting people to press
this.
There are people that have watched me for 2 years that have not subscribed, bro.
So I'm going to say this. Thank you for subscribing. Saturday night will be the first stream.
Okay, you got to
I'll
commit to
figure
that.
out a time. I'll put it on my X account. It depends what I'm doing on Saturday during the day, but most likely 9 o'clock to 9:30 will be the first stream Saturday night.
All right, there we go.
We'll go for a while.
Don't be late. You're getting all the love right now. You start getting late. You start doing this. You're gonna start feeling. You know, someone told me this. A much bigger YouTuber told me this when I was at 1,000 subs. He was like, so what do you think about the comments underneath the videos? I was like, bro, people are awesome. They're supportive. He's like, enjoy it right now.
So let me tell you this. I'm so desensitized because of the comments I put up with on Seeking Alpha that I'm so used to it don't matter.
That is good training. That is good training.
Like it doesn't matter. Like trust me.
No, that's fair. And I'm desensitized to an extent as well. It's just, being able to build a community means navigating toxicity and support and people who care and constructive criticism, all that stuff matters as well. So.
Asked if I'm being bad, which means, am I currently bidding on anything on eBay because it's Sunday night? And I said yes because
did your wife ask you that?
No, one of my buddies who I go to the conventions with.
He said, "Are you being bad?"
Yeah, because Sunday night is for eBay, bidding on eBay. Because most of the auctions end Sunday night.
This is what you're going to talk about on your live streams. There you go.
It's pretty wild, man. Pretty wild. You still got to come to a convention. Like, I cannot wait for you to come and see, like, what it's like. It's crazy.
Yeah, one day. Last time I was moving, so it didn't work, but I'm excited. I definitely want to do it. I think it'll be cool.
No, it wasn't my wife. It was legitimately one of my buddies I go to baseball card conventions with asking me if I'm bidding on anything.
All right. That is it, folks. Thank you, everybody, for being here. Yeah, YouTube channel, 500 subs, no content.
Thank you, everyone. That's pretty awesome.
No, that's really, really awesome. That's really, really cool. Great stuff. Thank you, Steve. You deserve it. You've been helping us out understanding the markets for the past couple of years, so I think people appreciate it. And yeah, there you go. All right, folks. Thank you, everybody, for being here. We'll be back tomorrow on the Market Open. We got a bunch of macro stuff this week, and we'll see everybody tomorrow morning.
All right. Later, everyone.
Thank you, everybody. See you guys tomorrow. Bye-bye.